Well, if you are...
We're going to have some damper today.
Yeah, well, we've got the new fire pit here in the middle of the desk. If you are watching on YouTube, you'll see that there is 3 of us in today's campfire chat. If you are new to the podcast world, our podcast world, we sometimes do these deep dive discussions. And Jess, this is Jess from Financially Fierce podcast. Welcome to the campfire.
Thank you.
Do you want, maybe I'll explain the ground rules to you because this is your first chat, right?
Sure.
Do you know the ground rules?
No.
There are none.
Good. Simple.
Vince Scully.
There are no rules.
That's right. Vince Scully from Life Sherpa. Welcome back to Camp Vegas.
Thank you, Glenn. But isn't the first rule of campfire that you don't talk about campfire?
You don't talk about campfire chat. And so basically what it is, we wanted a framework, and I've got a heap of comments here from everyone in the Facebook group. And usually when we record episodes, we like to keep them to, 30, 40 minutes or whatnot, where this is just, there's no real time limit, and it just allows us to get a bit deeper into discussions and without fear or favour. And then also if we won't, it's more, I pitch it maybe potentially more of advanced, so we won't, if Vince says,
This
ETF.
Campfire 201.
Yeah, like if Vince is like ETF, I'm not going to be like, oh, hold up, Vince, what does ETF stand for? So it's just pretty much whatever goes.
Electronic funds transfer, isn't it?
Something like that. The ATM machine,
That's right.
if you will. So welcome to the fire. Jess is, you've heard her on the main show before. She hosts the Financially Fierce podcast, and you do an online money growing program.
I do.
I think this episode will be going up in October, but maybe just tell everyone about that. We'll just plug everyone's wares for 10 seconds, then we'll get right into the chat. So tell us about the money growing program that you run.
Yeah, so I have a 10-week online money program called The Greenhouse. Effectively, I try to teach people the money skills and topics that we should have learnt at school. And so it's a 10-week structured program with 10 different money topics, weekly live community calls with me, but all the tools, templates, resources, checklists, spreadsheets, so that you can build your own financial plan and learn how to fish. So I'm a licensed financial
Fisher
advisor.
lady. Oh, sorry.
A licensed fisher. No, I'm a licensed financial advisor, and yeah, I just want people to feel more confident in taking steps to be engaged with their money and knowing that it's a lifelong relationship, whether you like it or not. I just
With
think, why
you
not?
or with money?
With money. They can stay if they want, but I think why not make it a good one? There are so many people who feel shame and guilt and fear and overwhelm. It doesn't have to feel like that. It can feel fun and exciting, and I think a lot of people maybe have done 1 or 2 things quite well, but they don't know what they don't know. And so by doing the 10-week program, people get a lot of confidence that they've got the foundation set up correctly.
Love it. So, you can just Google Jess Brady or follow Jess on Instagram, Jess Brady Financial Advice.
Yep.
Vincent, Life Sherpa.
Life Sherpa.
You're a regular pest around here.
I am a serial pest.
Life Sherpa Invest, it's happening, it's going along.
It's live, and our robo front end is also now live, which you
Did you know
tested
Vince
out.
set up a robo
No,
advisor?
I'm like, what are you talking about?
It's a Life Sherpa Invest. We have 4 risk-profiled portfolios built on the same
Oh, I did know about this.
Same investment philosophy we've been doing for our personal advice members for a decade, and it's now available online, $5,000.
Minimum investment amount.
Buy it now.
So you've created products.
They're ETF portfolios generally.
His advice portfolios.
Yeah, the same advice portfolio. They're now available on the Open Invest platform, and go online, $5,000, and we now have a little robot that will help you choose which of the 4 portfolios you should choose.
So I use that platform in my super fund, self-managed super fund.
So you just make pre-mixed options of different underlying ETFs.
Yep.
Is that what? Yeah, right. You pick from the 4.
Well, it just means if you're not an advice client and you want to rock up and invest in a portfolio that has got good history, good track record, and auto rebalances, there you go.
Your fund? Or
Well, we
you're
don't run the
just-
platform.
Yeah, right.
They're our portfolios,
Yeah.
but they're run on the Open Invest platform. So they're the responsible entity for the platform,
But it uses your IP.
but it's our IP.
Yeah, right. You're a busy man. You're always doing weird and wonderful things.
That's it. So there's exactly the same portfolios you'd get if you were a Life Sherpa advice client.
Cool.
But you can buy them for $5,000.
Why the 5,000 minimum?
The 5,000 minimum is about trying to get a minimum spread across
across the assets. Yeah.
So the alternative to get it lower was to eliminate the smaller allocations. So if we've got two microcap funds in the portfolio, which invest outside the ASX 300. And so if you've got a 6.75% allocation to that, 6.75% of $5,000 isn't a lot of money. And if you come smaller, you'd have to eliminate those small allocations.
Yeah.
And so it's just a balance between.
So in theory, this is the wild thing. You could go to the Life Sherpa Investor website because he lists the portfolio. Like all the IPs
at your
there.
face.
Yeah,
Yeah,
I'm
I don't
lighting
know.
up
Yeah.
and Laurel. And you could, you can't. I was going to say you could put it on BetaShares Direct, but there is some unlisted stuff in your portfolio.
You couldn't buy the two microcap funds, and the increased benefit from those two funds outweighs the portfolio fee. So they've added about 0.6% to the total return. So by reallocating some of your large cap Australian allocation to microcaps, you boost the overall portfolio performance by just over 0.6 over a decade.
I was going to say you could copy his portfolio, but you would need a provider that allows you to do unlisted managed funds effectively.
But the platform, including our portfolio management fees, only 0.65.
And is it sponsored?
Well, the individual doesn't have a CHESS sponsorship.
No.
The custodian does.
That's right.
The custodian's got their own HIN. Yeah. It is beneficially owned, though, so economically they're yours.
I did a meme the other day.
Me.
Son, why is my sister named Rose? Because your mum loves roses. Son, thanks, Dad. Dad, no problem. CHESS sponsored.
I feel like they need to see that meme. It needs to go up on the screen. Do you think anyone outside of us found that funny? I found that really funny. I was like, I wonder if people get it.
Maybe. I think if you're in the Money Facebook group, you'll get it.
Yeah. Hey, we're going to start this campfire by running a pre-roll ad block right now. Before we get into it, this show is general advice only, and I've got a license to provide that advice. Full details can be found in the show notes. I'm a former financial advisor. Now I do the Money podcast. If you're a regular here, we call it M3, and we do a podcast called Retire Right. I've got a book, The Quick Start Guide to Investing, is available wherever good books are sold. There's a link in the show notes if you want to turn up your investing to 11, or if you're just getting started. Let's get into it. Thank you so much for being here today. Okay, we're back. All right, so this is going up at the start of October. We did a few episodes about super last few weeks. In the Facebook group, there was a heap of questions about super and investing, and I just put them all out to discuss today. I'll start with this is more of a comment.
So it's from Newcastle and it's super.
Yeah. What's that mean?
There's a super fund that uses something very similar in
it's Australian and it's super.
It's from Newcastle and it's super.
Dev Raga, because I commented to this, I'm like, what?
Authorised representative of Money Sherpa Pty Limited.
Yeah, general advice. Dev basically was like, and he runs a podcast called Dev Raga Personal Finance, which is cool. Should employer contributions not be counted towards the concessional cap of 30K? Given we want people to be self-sustaining in retirement rather than rely on the age pension schemes. But the cap is the SG cap, right?
Yes, it's 12% of $250,000.
Yeah, but so Dev, no.
I kind of feel like there is an argument to say, should people under a certain age have a contribution cap? Because if you're really young and the government's expectation is you're going to have maybe 12% your entire career or a lot of it, I think they're very likely to come back and say, well, we don't need to offer pension schemes. You've been...
Yeah, but most people who are starting their career now at 12%, they'll be fine financially, I reckon.
Yeah, but why do we have contribution caps when you're young?
So trust fund kids don't game the system and we end up with...
Yeah, so we don't have
$3 million, which they'll get taxed on?
Well, that's not law yet.
Not yet. Sorry. We're jumping the gun.
But the interesting flow through of this cap is if you look at the proportion of the super tax benefit that's realised by the various income bands. So the top income earners get less of the super tax benefits or concessions than they pay of income tax. It's actually the next tier down that gets the biggest bang for their buck. So I'm not, this is possibly the opposite of the old reasonable benefit limits, that you either limit it on the way in or you limit it on the way out. Take your pick. And
But so what you're saying is if you want to encourage more people to save for their future, remove the caps.
If you're under, why not?
But I think the counter comment would be, well, most people under 40 aren't meeting the current cap anyway.
That's right.
So is there really a cap?
Yeah. I think there's a good argument that it should be a lifetime cap rather than an annual cap. And the use of the 5-year carry forward is going some way down that track.
Actually,
but this is part of why women end up with less super, because it's an annual cap. And so if you take 10 years out of the workforce, you've effectively lost access to 10 years allowance. So you can pick up 5 of them now with the look back. But if we made it a lifetime cap, I think that might be...
So I was reading, because I recently interviewed Allegra Spender for the podcast, and they had the productivity roundtable and tax reform and all that
Which
stuff.
is about the least productive thing that's happened in Canberra all year.
Yeah, and I thought, because Ken Henry was there. And
Who's that? Sorry?
he did the Henry report in
yes.
2009, like the last big tax review that this nation's had.
He kept a fairly low profile since his
love that he's-
performance at the Royal Commission.
Popped up. Okay.
However, I basically said, did Ken have anything different to say rather than his comments in the Henry review? And then the answer was broadly no, but I thought, I'll read the Henry review just to refresh my mind. He was basically saying remove contribution tax completely. Any contributions that go in are taxed at your normal rates, but with an offset. And then the internal tax rate to be 7.5%.
Why don't we just make it more complicated for people?
Well,
That could actually simplify it. So rather than getting a tax deduction, if everyone got a 17-cent tax offset, you give greater benefit to lower income earners. I don't think that would be more complicated.
For people to get their head around?
Yeah.
I don't know. I think people are just... I think our tax system is very confusing. A lot of people are so confused about tax brackets.
well, one of his reviews and one of his recommendation was to basically take the tax-free threshold to 25 grand and have just 2 brackets. I'm like, ask ScoMo how that went.
Yeah.
But the whole thing is like something has got to change.
Tax billionaires.
Yeah?
What are we doing? Anyway.
We do.
Yes,
We
but
have an extraordinarily progressive tax system in Australia, that our income inequality after tax and transfers is actually remarkably low by OECD standards. Where we do fall down and why it feels tough for normal income earners is we rely on income tax for most of our tax.
Well, it's almost 50%.
Yeah.
yeah.
Which some of that's a consequence of franking, because franking credits with
Ask Bill Shorten how that went as well.
yeah. But the Costello change to franking credits, which nobody whinged about, including Jeff Wilson, turned it from a non-refundable offset into a refundable offset. So that turned corporations tax into, in effect, a withholding tax. So it sort of doesn't matter from a revenue perspective how big the corporate tax rate is,
Okay, so...
because most of it comes back out as franking credits.
Yeah. I think...
Or an offset against overseas withholding tax.
I think your thing with tax the billionaires,
Yeah.
like there's probably not that many in Australia. I think it's more taxing the big holes of stuff that gets dug up and sold
Yes,
more than
also
what
that.
it is.
Also that. I just think,
Well, remember, the states are capturing most of that revenue. So West Australia is extraordinarily wealthy
Well, that was the
because
whole,
of the royalties.
and with the GST
Yeah.
with Western Australia. I don't know. I just think there is so much stuff that gets sold out of this earth. And actually, you know what? This is like crazy talk.
Every stopped you before.
Yeah, that's right. Every economist who basically looks at any type of economic reform, do you know what they say?
They'll say some bullshit thing that is
No.
do that.
They
We're all
basically
Georges now.
Yeah, they say tax carbon, like have carbon tax.
Oh, Julia will be so happy.
Yeah,
Not under a government that she led.
no.
But can't we do both? What's that like all El Paso ad?
Oh, why not have
Por
both?
que no los dos?
Yeah. Like I think the income bands that we have need to be expanded out. I think it is completely fair and reasonable to assume that we should tax people who are earning exceptional levels of wealth more, which frankly, let's be honest,
So
for
are
a
you talking
billionaire-
wealth or income? Because I think there's a fundamental difference there.
Income,
That
I am talking
we have
income, sorry.
significant wealth inequality,
I mean-
but we don't actually have a material income inequality.
That
I
is-
think
one
it's
is
getting
creating the other.
Yeah,
No,
I
not.
reckon it's getting rich to tax me more than 50 cents.
Are you a billionaire?
No, but in terms of income, like if you're on, I think 50%'s pretty high tax rate.
It is.
So how are we taxing billionaires?
Just tax them more.
But it has to come from somewhere.
Well, we all know how well the 98% tax worked in the 60s in the UK. When
We do not. Say more.
The top income tax rate in the UK in the late 60s was 98%.
What?
And that's
No,
what
I'm not going. You know that I'm not talking that. That's wild. What? But
98
how much did you have to earn?
It was a big number, obviously small by
But it's
today's
still-
standards.
that's insane.
But that's why the Rolling Stones moved to the south of France. That's why John Lennon moved to New York.
That's why Vince Scully moved to Sydney.
Oh my god! I'm certainly not suggesting that, but I think what is the now was 250.
200.
What's the top? What's the where 200? We are 200 now.
200.
Yeah, right.
250 is the 296. Yeah,
296.
3 and 3.
Oh no, I'm getting confused.
No. So
Anyway, they're my two ideas.
the highest tax rate in Australia isn't it like 60% for trusts if you don't distribute?
Well, kiddies pay 60 on some of their money.
Yeah.
Can you get
But
to
only for like a slither of like $1,000. Like it's
and
so,
then it gets you back to 40 cents.
Yeah, it's weird.
What is the tax on?
I thought it was I'm going to tax
With some of
rate
those
on
Div 7A
trusts
things
who
you can
do
end up.
not distribute.
No, I think it's the top marginal rate.
I thought it was 60. Oh no, 47. Yeah.
I do recall a 60.
Yeah.
There are some quirks, though, about some of those distributions that I can't remember precisely how it was, but I think you can get to a 60 if
When
you
they say taxing trusts more,
trust don't pay tax.
that's
Let's
right.
start that.
So
Well, that's right. If they distribute all of their income, they don't pay
Yeah,
tax.
they don't
that's right. So
Like
when,
that ETF you've just invested in, that's a trust.
it's right. But it distributes the income. So I'm talking your run-of-the-mill discretionary family trust with mum, dad. Don't even worry about kids for a second. And if there was if that trust owned a business that distributed to mum and dad, and there was 10 people working, so PSI wasn't an issue. What's Chalmers talking about when they want to drill down on family trusts? I haven't had a chance to actually
I've never
look at
seen.
the details.
There's been no detail that I've seen.
I saw something about that type of income splitting.
Yeah, I
But
think
you'd think it's I don't know, because sure, PSI will get you all day long, but if there is a legitimate business and there's income, I think they're wanting to.
I haven't read anything about it.
Yeah.
Is this what you asked me about yesterday? And I said, I don't know, I haven't looked at it.
No, I forget.
I mean, some of those family trust concessions could very well be under that. I haven't seen the precise thing, but there's if you make a family trust election, you get to carry forward losses without worrying about continuity of ownership. You get to distribute franking credits, even though
I remember growing up in my late teens, mum and dad could distribute the tax-free threshold to us kids. That was a good
But
one.
the discussion that I've had with many clients over the year is, do you want to give 100% to your kids, or do you want to give 30% to the tax office. Take your pick. And I know which I'd pick, as most parents.
So, okay, and this is interesting when we say tax the rich, because I get it. Like, and I think a lot of the stuff that we see does come out of the States, for example. And I know, for example, you look at the Musks of the world, so they'll have all these, billions of dollars worth of shares, and you'd probably know this better to explain how they do. They basically put a loan against the shares, so they're not drawing an income.
Yeah.
They're borrowing money against the shares and spending the borrowed money. I don't think you can kind of do that here, can you?
Well, you've got to find a lender who's prepared to do it. So
Yeah.
you need a lot of money to do it.
Yeah. I mean, if sure, a private bank would probably...
Yeah. It's going to come back and bite you eventually.
Well, the chickens always have to come home to roost.
So is a tax deferred or tax avoided? I don't know.
Yeah. But then this is the thing. It's like, how do you... Well, I've been saying for years, and obviously I'm not an economist, increase the tax-free threshold, like Kenny Boy suggest, increase the GST, increase social security benefits, just lift everything up and tax spending more. Because the VAT in the UK is like 17 or something.
Yeah. In fact, I think there's a 40% rate for some things. But the problem with consumption tax, which is really efficient and
20% standard rate.
yeah, but I think there is a 40%.
Right.
My first job in my holiday between high school and university was working for this accounting firm who owned a chain of record shops, and the VAT rate on cassettes was different to the VAT rate on records because cassettes had educational uses. And so I spent most of my summer splitting out these invoices between cassettes and...
But that's the same issue in Australia. Like the yogurt is GST free,
But frozen yogurt is GST.
because it's got some labour or something. It's not produce, quote unquote.
And there's a very, very long and involved High Court case recently about the difference between a cake and a biscuit.
Oh, I saw some stuff on that. And so they named it a cake even though it was a biscuit.
A Jaffa cake is a biscuit.
Yes.
And so it gets taxed as a biscuit. But
It's funny.
getting back to your point about consumption taxes, highly efficient, difficult to avoid. But the problem is poorer people spend more of their income.
But that's
and it's
why
therefore regressive.
I'm saying increase tax-free threshold, increase social security benefits to try and catch it.
Well,
so you're
guess
not,
what? John Howard did that
Yeah.
in 2000 or 99, whenever it was.
John did a lot of things.
John did. And
Not all of them great. Some good, not all great.
well, in the early days, he did a lot of
Gun
good
reform, I would say, is pretty good.
Gun reform's up there.
Although apparently we have more guns now than we did after the amnesty. Yeah, apparently it's true.
Yeah. I don't know.
What's your reluctance?
I don't have any, by the way.
Yeah.
What's your reluctance?
I've got 2 here. Yeah, baby.
What's your reluctance to my idea?
What? A tax billionaire?
Yeah.
Well, my reluctance is in Australia there's not many. How many? 20, 30, 100?
It isn't that many.
But maybe it's not billionaires, but if you've got over...
Oh, yeah, 160 billionaires.
Yeah, great.
Okay.
160.
Well, let's walk this out. It absolutely goes back to Vince's point. Are we taxing income or assets? Now, you start taxing assets, you pull that thread of unrealised.
But if you tax...
Well, the Dutch do it.
How did that work out?
I don't know. Have you ever seen a poor Dutchman?
They're very normally fiscally...
But they have a deemed tax on shares. So when you hold shares, you get taxed on. It's like deeming for a pension year.
Okay, so if there was a billionaire and that billionaire drew $1 million a year as income out of a company, just for I don't know how they set up their spending though. So if there was $1 million earnings that came out of a trust or a company, there will be money landing on an ITR somewhere at a personal level, right?
You can best be sure that they will have set it up in such a complicated way that they are paying the least amount
and
of tax.
I'm sure they've worked it out with like loan accounts and all that stuff. But I think it is, you've got to, if you want to tax, I just think if you tax 161 billionaires, $1 million extra a year. It doesn't change the problem.
Yeah, sure.
in a $1 trillion budget.
Yeah.
But, maybe it's not from $1 billion on, et cetera. I think what you need to look at is the wealthiest. So if you look at from 2020 to today, if you look at the ABS data of what has happened to the wealth of the different
but that's just
quintiles?
Quintiles? Or quartiles?
You can see the disproportionate increase of overall wealth of that top amount. And
most of it's because of property, though.
Yeah. I mean, nobody would disagree that we have wealth inequality in Australia.
Which is
it's not as
why
bad as overseas, but it is
But
it is bad.
how long does the alarm have to signal for before the bloody firefighters arrive?
Wow.
But I think the bigger problem is not do we have a problem? I think most people agree we do have a problem. The bit that's harder to solve is what's the solution? And given the kerfuffle about Division 296, about taxing capital, that's the only solution. We're already taxing income heavily. So to get more out of that stone, you've got to start taxing wealth.
So if you earn 200 grand a year, which it's not bad money, but it's not. You're not a baller if you live in a capital city.
Well,
It's pretty tight in my life, let me see.
It's the top 3% of the workforce, so let's be clear.
In Australia?
In Australia.
So if you earn $200,000, you probably have a mortgage. You probably have to, not necessarily pinch any pennies, but you're not out, or maybe you're buying a boat and going on crazy things, versus someone who earns $1 million a year through a trust from wherever. If you actually look at it from way, way back and you just look at that and you go, is that fair and rational? When that person's earning 5 times the amount of income to be taxed at the same rate as someone who's earning $200,000, I think if you look at it on balance,
do we need to add a 30%? A 60% rate, maybe. But I think the bigger problem is we're relying too much on income tax already, and we should be looking for other sources of tax.
Totally, and we have so much of our wealth in Australia in property, and it's unproductive and not very helpful to the economy. And that's why adding a consumer or a consumption tax taxes the people that are already hurting, and it is probably not great for business.
Yeah,
and it doesn't do anything to solve that loop.
But getting rid of the refundable nature of franking credits would be a good start.
Sure, have an offset all day long.
Yeah, just a non-refundable offset.
Yeah.
Which is what they originally were. The original point of franking was to avoid double tax. It was never designed to say that if a dividend gets paid to a zero-rate taxpayer, they should pay no tax on it. That wasn't the deal.
It's funny, when you look back at Howard and Costello years, right?
Not to be confused with the Abbott and Costello years.
That one. You look back at the money that Liberal government was throwing out and giving away at people, you'd be forgiven if you thought it was a bit of a socialist party.
Yeah,
we had the first home grants, we had the baby bonuses, we had the trust concessions.
Is this with Howard?
Yeah.
Well, they obviously changed how investment properties are taxed. Or are you just talking about?
Well, part of
I'm just talking about throwing money at the
there were a few things
population.
that happened there, and you got to look at the timing. So this was at the tail end
of the recession.
Of the 91 recession and getting inflation out of the system. So Howard brought the country with him on GST. If you try to introduce a GST today, I don't know how many people would have the balls to do that.
And he took it to an election.
He took the country with him over many years. It had failed previously. What was the Hewson? He used to introduce himself as, I'm John Hewson, and I used to be the next Prime Minister of Australia.
Yeah.
And he lost the ultimate unlosable election. But Howard brought the country with him. Whatever you think about John's politics or his eyebrows, he did bring the country with him.
I like his parachute walking.
The walking gear. That's what
rugby walking gear.
I'm in my 30s, so I don't remember. I'm in my late 30s, but I still don't remember. I obviously wasn't across any of this stuff, but all I remember seeing on the news when I was little watching him was just his daily walks with his security guards in his
Wallabies parachute suit.
You feel like you can hear it. I can hear it that this.
Yeah, I used to watch Insiders on a Sunday morning with my boy. So he was born in 2000. So when Kevin 07 became Prime Minister in 2007, he was 7. Right? And so one morning, shortly after that election, we were sitting what I was watching, and he was playing whatever on the floor, and he looked at this picture of this Kevin Rudd was on Insiders, and he went, "Dad, that's the guy that stole John Howard's job."
Oh, he did steal John's job.
But getting
John
back
should have gave it to Peter.
Yeah, he should have, and he should have done it 4 years earlier.
Yes.
But back to your point about, we had the GST in 2000. We had the first home buyer was in effect a stimulus to avoid the property industry going into a slump because it now had to pay GST. Mm. And you had the simplification of the CGT indexation. So you used to index your cost base every year to inflation, which obviously was a big deal in the early 90s so CGT came in 86, 87, yeah. September 86, I think. And so inflation was running at 7, 8%. And so the value of whatever asset you bought was going up because of inflation. So indexation was designed to remove the tax on inflation. And so Howard said, well, let's simplify this. If people hold an asset for 5 years and there's 10% inflation, well, how about halve the thing? It's a lot simpler. So that will make perfect sense in 99, 2000. Makes a bit less sense now with 3% inflation. Mm. And, of course, the other thing that happened in 99 was we took the brakes off immigration. So we're seeing this massive uptick in immigration in 99.
But that's also, economics. If you want more money in the pie, just grow the pie.
Yes.
And, until, I don't know, I did that reel a few weeks ago about immigration and I almost got cancelled.
I didn't see it. Oh, no, you probably don't want to talk about it. Is it too jarring?
Is it raw?
No, it's just, I just thought it was interesting. I'll play it. The numbers were just interesting. And it was Alan Kohler wrote about it in...
his housing book?
No, just in an ABC article. And that, my friends, potentially is why it costs so much to rent anywhere and there are no houses to buy. In the year 2022, ending in June, Treasury forecast 41,000 people net migration. The actual number was 203,000. The year ending June 2023, Treasury forecast 235,000. The actual amount was 535,000. The year ending June 2024, Treasury forecast 235,000 people. The actual amount was 445,000 people. And the year ending June that's just passed, 2025, the forecast was 260,000. They then changed it halfway through the year to 340,000. And the official numbers aren't out yet, but it's estimated that it could be around 380 to 400. So over the last 4 years, the government Treasury forecast 850,000 net migration numbers to Australia, right? Actual number was 1.5 million. So I got many inboxes. Thank you for saying you were disappointed in me, everyone. I think my whole thing was I'm just blown away at the forecast is so off.
What's Treasury doing?
Well, that's why. Do you actually know how? Because the way and they go, you got to look at all the data and go back. And I get that you do have to look at percentage based on population and all that.
I mean,
but just let me finish, Vince. My whole thing is, sure, during COVID, they said this much, it was less because, all this stuff, right? So I get it, you got to look at a long-term thing. I get it. My thing was, if the government of the day is doing their budget forecast and using Treasury data, and if Treasury data is so wrong, that's a problem. And is Treasury data for immigration... The way that if you look at the numbers coming into COVID and out of COVID, it was almost like it was an algorithm or some type of calculation that had a lag on it. And that's why it was I don't think that's...
So your point is if they're using Treasury data to make predictions of how many new homes we need, of where money gets deployed, of how infrastructure is built.
There's always going to be less. There's always going to be less projected than the actual numbers. That was my point. And... if the government is saying I don't think anyone that you talk to has a problem with migration. We need skilled workers. You know, you want to build all these homes.
Well, I am an immigrant.
You are.
Yeah, but I don't think we can say that. I don't think we can make that statement to
What?
say I don't think that anyone has an issue with migration. We are recording this on a Friday. We are seeing some crazy.
Oh yeah. Sorry, I'm talking reasonable people who aren't racist and all that stuff.
And exactly, I think that is the point that we need to make here. Like, we can have an objective conversation around looking at numbers and forecasting and how this impacts supply and demand and the cascading financial implications. But I think what we have seen a lot of is people feeling really stressed and really stretched and very financially crippled by what they've had going on over the last few years. And it's been an easy thing for them to be like, well, it's migrants' problem. It's all about migrants. And so I think it's just really important to like point that that's not what we're saying. But it is, to me, very confusing. Like if my job in a corporate, which I worked in for a very long time, was to go and make predictions on numbers and I got them wrong every year catastrophically, I reckon I'd be in trouble.
Yeah, and so I think that was my thing. And if they're saying, yeah, this is the amount of people that are coming in, why don't they do some type of thing where it's like, for this financial year, our migration number is X, and once we get to that number, we stop for the year.
How does it work?
Do you know?
We used to. I recall joining a queue when I became a migrant.
I'm also first generation Australian, so neither of my parents were born here. So,
but you were.
I was. But the irony that we don't have enough construction workers to build the homes that we need, but it's hard to get them over because there's no homes for them to live in.
Yeah,
the mind
but and I get it. Like I get it. There's more people. So, okay, let's just do 350,000. Whatever.
Glenn, in your tech savvy place, has got the old school. I reckon my grandmother had that calculator.
You know why I bought it? Because in
Nostalgia?
this studio, the solar ones don't work. I had to buy one with a battery.
Yep.
So we've got 950 people a day net in Australia. Like, it's a lot of people.
It is a lot of people.
And if you're looking, and this is it's like grabbing that third rail when
Is that net? Sorry.
Yeah, net migration. And that was like when someone was like, you got to talk about net migration. I'm like, yeah, I was. Like, read the...
Yeah. I mean, the problem with the net migration number is that it's heavily skewed by students.
Yes.
And that's what happened after COVID, that net migration is, people in, less people out. So a student comes for 2 years, they're in inbound in year one, and they go outbound when they graduate. And in COVID, the inbound stopped.
Yes.
And then you sort of had all these people finishing the degrees and moving out.
It was a net outflow the next year. Yeah.
And then you had this massive turnaround.
Yeah.
Then you've got this clampdown on unis growing their student population, which caused all sorts of other problems, but setting that aside. But the point I was about to make, before I rudely interrupted you, was that if you just line up net migration and house prices,
is it correlate?
1999, it took off. You just line the graph up.
But when did the GST?
2000.
No, the CGT. That happened around then
It
as well.
happened, but that's a
Look at me getting my acronyms.
that's a rounding difference in the scheme of things. That the real, and people use that argument all the time. They go, 99 house prices took off. That must be the CGT problem.
Causation, correlation.
That's correlation. But you look at the migration numbers and what happened in 99. That's
But this is the whole thing. Like, they go, oh, the problem isn't migration. Like, no, I wasn't saying. I was saying a possibility that it could be a factor. The house crisis in Australia, it's many factors, but if you break it down, it's called supply and demand.
yeah. So if you're adding more people than you're building houses, you don't have to be a rocket scientist to go, that's a problem. Now, how do you fix it? Do you build more houses? Well, actually, to build more houses, you need more tradies, which means you probably need more migrants. And it becomes a bit of a thing. But this country was built on migration, and
We've boundless planes to share.
We can't exactly flooding rains and whatever it is.
It's not the Irish.
No, is that not? Is that? Were you not quoting what's her name? The Manly woman. What's her name?
No,
Quoting the
I was
friggin'
quoting
Australian national anthem.
Oh, I thought you were talking about what's the Manly poet? McKellar, Dorothy.
Oh, no, I was just doing the thing that I had to sing at school every Friday on assembly. But sorry, and I shouldn't have interrupted you. Is it migration or is it housing?
Well, in order to have migration, you need housing.
It's chicken or the egg stuff.
Yeah. But I think migration is where it becomes really divisive and
I just honestly think if you look at the numbers and the data, and I'm going to get cancelled, I'm sorry everyone, I'm sorry I disappoint everyone, it's broadly not an issue with negative gearing and CGT.
I don't think it is.
It's sure these factors, you put all these factors in on the table, boom, you've got a big problem. But if you picked one or two things away, negative gearing and CGT concessions, I don't think home's going to be affordable.
I think the problem is when we talk about migration is it becomes a very personally charged, very emotional argument, and it becomes very targeted at individuals.
Yes.
When we instead look back and look at, well, we have a supply and demand issue, and yes, CGT may be part of the problem, and yes, we then have to start looking at the common factor here, and it's like, well, who's in charge around here, and what are they doing about it? Because otherwise, we're creating
on the CGT issue. I used to think about this. Do they say, well, you only get 25% discount on property,
which is it's probably a good time, given that we've nailed inflation.
Yeah.
To go, well, maybe 50% is the wrong number to simplify it. Maybe it should be 25%.
Is, do you have that across the board, or is it just equities stay the same, private entities, business stay the same, but property?
Do you tier it? We tier lots of other things.
I mean, it seems to me to be
Also, why am I giving up?
a slippery slope to start dividing asset classes.
That's right. So it's got to be, I think it's got to be, we're dicking around with CGT, whether you own CBA shares or at property down the road, it's 0.25.
Yeah. Which is probably close to inflation, which was the whole point about not taxing inflated gains.
Mm.
And should you be able to deduct off all income?
Example, sorry?
Well, negative gearing, that's a good example. Should you be able to deduct a property loss against earned income? And Australia is one of the few countries in the world that allows you to do that.
Yeah, I reckon it's probably a...
I mean, quarantine...
okay, yeah, well, this is interesting.
So you quarantine it to investment income.
Yes.
So you've
That's
got an
right,
investment
yes.
loss.
Oh,
it's
now
offset,
you like my
It's offset
idea.
against the investment loss.
No, I'm just trying to think of this because I'm kind of... My brain's spinning. I think it should be quarantined to investment.
Yes.
However,
Probably.
the problem that I think most middle Australia and people do, they go and buy the investment property because of the tax strategy, negative gearing.
Because their accountant told them to.
Yeah, because their accountants will go, pay less tax, where accountants won't go, but on net cash flow, you're worse off.
Yeah, it's terrible. Yeah.
I'd rather pay more tax and have a net more cash, but that's, call me old-fashioned. One thing I do like in the States you can roll a gain into another asset. So if you sold a parcel of shares, there was a $50,000 gain. If you sold a parcel of $100,000, there was $50,000 gain. If you bought another $100,000 of shares in the same, it just rolls into.
You do that with housing too. I can't remember what it's called.
Yeah.
It's something.
So that's kind of cute, but I'm probably okay with not offsetting investment losses on income.
Australia is one of the few countries that allows you to do that. But perhaps
that doesn't make more houses.
Well, it possibly makes it worse because you've now removed a subsidy for people to invest in properties to provide rental housing. So if you remove that, do you reduce the supply? Maybe.
Do you? There's still the same amount of houses there. They're not like...
Well, if you look at the new supply of housing, that is the 200,000 new dwellings that are built every year.
How are we going with that, by the way?
Oh, 200,000 is pretty stable.
Oh, you're not talking about.
No, not
we're
the
behind.
government.
We're behind. I'm like,
Yeah.
no, we're not on track.
No, I'm not talking about
Yeah,
where the government spent their $10 billion to build 200 houses or whatever it was.
Didn't they forecast 1 million houses?
1.5 by
But we
2029.
build
We're already behind.
we create about 200,000 new dwellings a year.
Against net migration of
300 and something, over 300.
But
we
no,
have-
households, you've got to divide that by people per household.
and we have 2.5 people per household, I think is
Well,
what.
the number of
That's
people per
interesting.
household has continuously fallen
Yes.
until the last census. So the last census was the first time the number of people per dwelling went up.
So if I go 350,000 times divided by 2.5,
2.1.
I think it's about 2.5. I could be wrong.
I'll go 2.4, call it halfway. That's 145,000 households-ish. And how many new homes are we?
200.
So we're fine. What's going
So-
on?
Yeah.
But why doesn't that stack
But
up?
then they say it's all to do with Airbnbs and land banking and all
Yeah,
that.
I mean,
Definitely.
What is the land banking thing?
well, this is one of the great puzzles in economics, that with the increased cost of building houses, so it's more expensive to build a house now because labour's more expensive, because you've got to build them to higher standards, you've got to put more insulation in, you're going to make provision for electric.
Oh, I thought you were talking
Stuff.
about the animals that they find on development sites.
No, they might do as well. And yet, economics 101 would tell you that should flow through to the price of land, that if the people can afford a house of X and it costs Y to build a house, then the land it sits on should be worth X minus Y, or Y minus X, whichever way around that was. But that's not happened, and that's because the people who own the land are able to see, well, actually, the price of the land's going to be worth more next year, so I actually have an incentive to hold it. And so the underlying land's going up, and therefore all of these costs are flowing through to...
And the house being empty.
No, that's a separate issue.
Yeah, I was going to say
this
that is
so
an
land
important
banking is about
issue.
raw land.
Yes.
The house...
Whoa. But the land banking, a lot of that would be state-based and local government red or green tape.
Yeah. But
Not
also
allowing developers to get in there.
the interest in the incentive for the landowner to hold it till next year when it's going to be worth more.
That's right, yeah.
That the return on... Sorry.
No. Sorry, you go.
But also, if it's a free world, if I want to buy a block of land, are we saying that the government says it's almost like this, when they'll do a compulsorily can't speak acquisition,
Yep.
right? Can the government rock up and go, hey, bro, you've got 30 acres just out here off Newcastle. You've got 5 years to get that developed for housing, or we're taking it over and doing it for you.
I don't think the law would permit it today, but it's not a bad idea.
No, but that's what I mean. Like,
Yeah.
if we've got all this land, good land, maybe there needs to be something about, well, if you don't develop it, the government's buying it and we're doing it.
And then how do you provide the infrastructure
But
to get
that's
there?
another thing.
Well,
So if you free up 20,000 acres in Luddenham and you
A lot
go...
of people made a lot of money out there.
They
A bit of
did.
new money.
They
West
did.
of Sydney, giddy up.
How do I provide the water and the electricity and the roads and the telecoms and the drainage to those blocks and the schools that go with them and the hospitals that go with them?
But I think
And the landowner's not actually paying for very much of it. There are infrastructure contribution charges, but they're small relative to the cost of...
we have 1 million empty homes.
We do. We have 11.6 million dwellings and 9-point-something million households.
Yeah, like
So do the maths.
Yeah, like talking about all these infrastructure costs and all of the complexity and time, right? That's a big, Rome wasn't built in a day. I mean, I don't know. It feels
but if you,
to me like we should start there.
So taxing vacant property is good. Should your holiday home be taxed?
Yeah,
potentially,
yeah.
but that's the dance, isn't it? Like, if I've worked my ass off and built wealth.
I'm not sure I call what you do working your ass off, Glenn, but,
I'll accept that. If somebody...
when you were an advisor, you would have been working your ass off.
I work. No, I don't really work.
No, we worked a long day yesterday.
We did, but they don't happen that much, the hard days.
It was a hard day's night, though.
Yeah. So if someone is, successful, earns good money, we don't want to stifle that with socialism and taxing them up to the ears, because where's the incentive to do well?
No.
No. Let me just finish and then you can go to town at me.
I'm just going to say no.
And then I want to buy a holiday house and keep it empty throughout the year. I should be allowed to do that. Free world.
You are allowed to do that.
That's right.
And
that's why I think some of these discussions online, and that's right, I'm less socialist than I am not, or whatever. Like, I'm going to tilt more to capitalism than socialism. Just that's who I am. It's got to be some of the chatter. I don't like it that you can't work hard, buy things, and enjoy life. Like, don't make me sell my holiday house to put someone in there.
I think that's quite a
But there would be people
extreme.
who think that. That's what I'm saying.
And that's where I think the media jumps into that, and because, of course, they probably have some holiday houses where it would, affect them. And you have to really think about that in terms of who gets all of the narrative in terms of the media. And,
But can we put a land tax or something on...
Well, we do have a land tax.
On holiday houses?
Well, on non-primary dwellings.
Yeah, okay.
Could it be higher? Could it be higher if they were vacant?
Yes.
Could they be higher, which Victoria's started to do?
You can keep your holiday house. You can keep. No one's forcing you. No one's saying you didn't do. But it's like, well, someone is going to lose, and so there is no perfect. I mean, surely there is no perfect solution. Vince, you'd have a perfect solution if there was one. Is there one?
And we'll hear it right after the break.
If you're after personal financial advice, don't get it from a podcast. But if you want guidance tailored to your situation, head to moneypodcast.com.au and click Get Help. We'll connect you with one of our trusted professionals, financial advisors and mortgage brokers, who work with people right across Australia. No matter where you are, they can help. Now, before we get back to the show, a quick reminder to protect your financial life. That means having income protection sorted. It means having death cover if there's any debt or dependents relying on you. It means getting your personal insurance in order. Most people insure their car, they insure their house, but what about themselves? Sky Wealth, who support this podcast, are specialist financial advisors who can help you get the right cover in place. Their advice is often more comprehensive and better value than going direct through your super. Book a complimentary 15-minute chat at sky.com.au. That's skye.com.au. And they'll point you in the right direction.
Okay, Vince, what's your perfect solution?
I'm not sure there is a perfect solution to this.
There's always going to be losers, but you want kids and families intent. Like, that is the reality that we have to talk about, that there are people who work. We used to say, well, if you aren't able to get ahead, that is your fault. Thatcher called it like a personality disorder if you were poor, basically.
I think poor Margaret gets a lot of unfair stick.
That's what she said.
But she did haul Britain out of a complete mess. If you'd seen Britain in the late 70s, where... Yeah,
Are you Googling what she said? Yeah. I think
I know
she called it a personality
there was a
defect.
couple of quotes that she gets tarred with. And certainly the later years... Well, she may have lost the plot, but Britain was a basket case in the late 70s.
Yeah.
I like this one.
Yeah.
She said this. Maybe I was influenced by old Maggie May over there. The problem with socialism is that you eventually run out of other people's money.
No, can you find the one that I'm talking about?
The other one she gets a lot of flack. There's one about there's no such thing as society.
Yeah. There is no such thing as society. There are individual men and women, and there are families.
You've not found the one.
No, I haven't. No. What was it about?
Poverty. Basically, my point was, we used to say to people, if you're poor, that's because you probably chose to be. You didn't work hard enough. You didn't do the right things. And I think it is very fair to say that for a lot of people, they are working in full-time jobs. This
Yeah.
is not people who are on Centrelink and just,
Yeah, I mean, this is one of the biggest problems with a lot of American personal finance content, that lack of success is seen as a personality. It's your fault.
Yes.
So when you read a lot of the hustle culture stuff, it's, you're poor because you drink too much coffee or you choose to be. But, I mean, Margaret Thatcher did one great wealth transfer. So she gave every council house, which is the equivalent of housing commission properties here, the right to buy it. So Britain had 20-something% of households were council or affordable housing.
God, that's a lot.
And she gave at least the Conservative government, which she led, it wasn't her money.
Which is the Tories, right?
Yeah.
Yeah.
The right to buy. So that changed the lives of millions of Britons and brought them into the middle class.
Contrast that with what we're doing.
Yeah. Now, where that did fall down was those council houses weren't replaced. And so you now had this...
Welfare must not be a way of life for people trapped in dependency that is not compassion but cruelty.
Yeah.
I'm finding it. You two
You
keep
can
doing
you can find
But
it.
most homelessness is not actually due to lack of houses.
Mental health, isn't it?
A lot of it's mental health, a lot of it is inability to keep a job. There's a whole bunch of reasons why people are homeless. Very little of it is to do with the supply of housing.
What? Really?
Yeah.
What about like a lot of the old women who are living in cars and things who can't get rent because, they have no... I mean, I don't know what it's a proportion
It's
of.
tiny.
Is it?
But
Homeless is
don't
largely...
they say that women over 55
It's the fastest growing. Fastest growing. And this is the thing
It
that...
was. It's not anymore.
Oh, has it stopped growing?
Allegedly. I think
good.
I think it's
But homelessness is largely a young male problem.
Does that have anything to do with substance abuse?
A lot of it does. A lot of it has to do
very
with
sad.
mental health. A lot of it has to do with access to education and how our education system potentially fails a lot of our young people. And building more million-dollar houses ain't going to solve that problem. We do need to rebuild more affordable housing.
But the problem is, it's just such a state... Like all the issues that Australia has, it's annoying because it's broadly state issues. Should we federalise or whatever?
Now, that's the third rail, isn't it?
It really is. Hey, I saw this reel this morning. What is the country with the longest name in the world?
It's not the United Kingdom of Great Britain and Northern Ireland, is it?
They reckon it is, but then I saw someone commenting, it's like, no, Britain's a country, no, Wales.
Well, they're all countries.
They're all countries, but they reckon that's the longest country name in the world.
I was like somewhere in
Azerbaijan? But yeah, what is it? The United Kingdom of Britain, Wales, Scotland.
Thatcher said that poverty was a personality defect.
And what was the context for this alleged statement?
No idea.
But it is a very serious
because you're
claim.
poor.
Yeah.
But there's
Have to be
okay, but
vindicated on that.
it's good to close that loop, isn't it?
Always.
There's difference between poverty and being broke. Because poverty, you can get trapped in it. Where being broke often could be from some choices that you've made.
What is the delineation for you? Because the amount of people that live on the bread line or the poverty line or paycheck to paycheck, when I saw those years and years
When was
ago.
the last time you saw a paycheck?
I've never saw one.
I have never.
Seen one.
The closest I've gotten is when I started at McDonald's, we had cards, like employer cards we used to punch in and punch out, but they paid us in our bank account. I've never had a paycheck. It's very sad. At Macquarie, though, they still did the envelope day. They still called
envelope
it
day
the
was envelope day.
But we didn't even get an envelope. And they were all making a thing about envelope day. I'm looking for an envelope, and they're like, no, it just gets put in your bank account.
No, we used to get an envelope.
With a check?
No, with a letter going,
You've been paid.
Here's the number of options you're getting, here's the amount you're getting paid.
Did you guys?
And then we all went down to the Chernobyl house for lunch.
You wouldn't have crossed over when you were both at Macquarie.
No, I left in 03.
2010, nice.
The Millionaires Factory. Did you guys become millionaires from Macquarie?
Billionaires, tax me more.
Tax me more, baby. Beat me with your fiscal stick.
Oh, my God.
Was it Costello or someone who said the problem is increasing tax to cover spending at a federal level doesn't end well?
He would have said something like that. I doubt he made it up, but he would have said something very similar. But, we don't have a inability to spend problem at government.
No.
Because the government in a country which prints its own money, has its own autonomous central bank, it creates money. So if this is a problem we want to solve, as long as the economy has the resources, the physical resources, so the government could commission 500,000 houses tomorrow and could pay for them. But the problem is there aren't enough chippies and enough sparkies and enough roofers to build them.
Mm.
And the state governments are getting in the way of releasing the land. And many neighbourhoods are complaining.
How does this end? Because migration is not going anywhere and the government...
Well, Sydney's 40% bigger than when I moved here.
When was that?
93.
But you've got to also think as people breed, the population...
I've done my bit. I've only produced one, so I haven't even got to replacement yet.
I've got these circular thoughts
Well,
of
you're doing your bit for the nation.
How?
By not reproducing.
I don't know. I oscillate.
Well, you've got time.
I was
time is
saying
on
to my
your side.
psychologist the other day, is this TMI, whatever. I'm like, is the fact that I don't know who I want kids proof that I probably don't want kids?
No, I think it's just you being honest.
Oh.
I think if a female says that, it creates a whole different conversation.
So my thing is, if I meet someone and...
You should freeze your eggs, Glenn.
I might, yeah.
It's expensive. That shit's expensive.
I just thought if you meet with someone and you both want, if I met someone I really want to have a kid, I'm like, yeah, let's go, whatever. If they didn't, I'm like, yeah, right, sweet, let's go, whatever.
You're allowed to do whatever you want and you're also allowed to
that the
change
thing?
your mind.
Yeah. Okay.
Actually, probably not after you have kids. I think that's
No.
the cut. Is
Peter
the horse-
Costello said you should have one for mum, one for dad, and one for the nation.
Sounds like something old mate in Britain would say. Who was the war guy?
Churchill.
Think of
Churchill,
England?
yeah. Think of England,
Yeah.
do a big country.
Bloody
Lie
hell.
back and think of England.
Yeah.
Yeah.
Well, wasn't Churchill, he said that democracy was the worst form of government except for all the other ones we've tried?
Well, but yeah, and it's similar to what I say, which I probably stole from somebody, is the worst system in the world's capitalism, but the best happens to be capitalism as well, because...
I think that might be Warren Buffett.
Was it? It may have been.
I mean, I was listening to something this morning about how we're just entering this new era of capitalism around government capitalism and what is going on in some places in terms of sharing profit. Have you guys?
No.
It was off the back of the NVIDIA announcement that was yesterday.
We don't swim in your hard left circles, Jess.
It was by NAB. Oh my God. It was on the, no, it's around.
Oh, it reminds me, I've got to reply to Gemma Dale. She's going to come back on the podcast.
Chippendale.
I don't, sure, I'm more left than you guys. That's okay. And
I don't care.
I'm
It's
not
because you're younger and more female,
I'm younger and more female. Good
which
observation.
makes you socialist.
Good observation. Yes.
Is that the rule, is
Caring
it?
and nurturing. How
Well,
terrible.
who was it that said that if you're not a socialist in your 20s, you don't have a heart, and if you're a socialist in your 50s, you don't have a brain?
Oh, I don't know.
Oh,
Because
gosh.
I think there's a swing back
Or
for
words
many.
to that effect.
But so you've seen the US is obviously in talks with the likes of some of these big companies around, as an example, selling chips to places in different parts of the world and taking a cut.
Oh,
So
yeah.
this government.
Yeah, so
but
yeah,
the US
US
is
wanted to, Trump was like, we'll buy 10% of Intel or something like
Yeah.
that.
But the US is one of the great centrally planned economies of the world. It's far more regulated than most other countries in the world. You need a license to scratch your ass in the US.
But not get a gun and shoot.
But not to get a gun, yeah.
I love that when I was talking about this, you're like, yeah, you and your hard left circles. I was like, I'm literally talking about what the US government is trying to do.
Did you say you're a commie?
I did not say that would be a hard left
because when I chatted to Allegra, I don't mind her. I think, because I said to her, I'm like, are you a progressive capitalist?
Yeah, I saw that.
And it's because she's got a business background and all that. And it just goes back to, in that whole spectrum, the further you deviate from, or the further wide you go, the crazier it gets, either side of politics.
Either side of anything.
That's right.
Ever.
Yeah.
I don't know what I am. I just say what I think. Sometimes
But
I'm
whatever
wrong
it is,
and
the
I
biggest
change.
problem we've got is we don't have lawmakers with a spine anymore, that people live by focus groups and opinion polls and nothing gets done.
Yeah. The internet really effed everything, didn't it? And the 24-hour news cycle.
It did.
Because you can't do any planning. That was like one good thing about China. We want to build a freeway there and a heap of homes. Done. Like,
What does that have to do with the 24-hour news cycle?
Because they don't have to worry about it. They can just
they'll
get
just
in.
make a decision and build the infrastructure.
Oh, sorry. Okay,
Yeah.
I get
I
it.
mean, having worked in infrastructure in my previous life, if you ever watch Utopia, that is not comedy. That's a reality show.
I don't know what that is.
Have you not seen Utopia?
I haven't really watched
The
much
ABC
TV
have this series with the Working Dog Cruise, which is set in the Department of National Development or something in Canberra.
Oh,
And
I haven't seen it.
it's real. I mean, I grew up with Yes Minister as my introduction to government.
I don't know what that means.
Well, it was a comedy
British
show
show.
in the 70s.
You're telling the story.
I watched it with my mother, so it must have been the 70s.
1870?
No, 1970s. And he was, Sir Humphrey was the senior bureaucrat, so the equivalent of a cabinet secretary here, or head of prime minister in cabinet would be the equivalent in Australia. And it was just how government worked. And I thought it was a joke until I did some work with government, and it is true. And when you spend enough time in that space, you realise why stuff doesn't get done and why it costs so much money.
Oh, yeah. It's wild. So it's just crazy. All right.
What are you doing?
When we going
I
to
was
talk about
looking at
super or something?
Yeah. Okay.
We've now solved all the world's problems. We can
And
now get on
some.
to something more
We'll
serious.
build the government. We fixed it for them.
Maybe you need to run for government, Glenn. Glenn for Glenn for PM.
Imagine. I would vote for you.
Okay, you know how I would do it? Because I really...
The fact that you've already got this planned tells me this is not the first time that you've thought about this.
I would like to, potentially one day, but I think the problem is I live in a seat that it's very incumbent.
We were talking about this yesterday.
Labor, presumably.
Yeah, and it's not that I'm anti-Labor Party. I'm like, so it's the most safe Labor seat in Australia, right?
Many of them have to move for their first.
Yeah, but they're not going to. Oh, it might be an advantage. We'll install someone. It doesn't matter who we install because they'll get voted.
What are you going for? Are you going Libs? Are you going
You're
Teals?
not female, though, so you have a bit of a
Yeah.
problem.
Oh, I don't know. Once upon a time, I'd probably do Liberal, but I'd probably do Independent, if I'm being honest.
Can I
You
share?
certainly, sorry.
Oh, sorry, I was going to say, can I share a secret?
Mm-hmm.
My year 4 teacher, I think she actually wrote it on my school report. It may be the only piece of memorabilia my mother has from my childhood, like to the point where I had to reorder my birth certificate because she couldn't find it. My year 4 teacher told me that I am going to be the first female Prime Minister of Australia.
Call her up now.
I know. I'll be like, Julia.
This is controversial, and so many people will disagree with me. I personally believe one of the best politicians / prime ministers that we had was Gillard.
I was in my
I don't know. Why do you say that?
I say it because very intelligent, like very good at communicating, and
put up with a heap of shit.
like
I don't think she understands what the word misogyny means, though.
Oh, Jess's face.
What does it mean? What does it mean?
Well, that speech had nothing to do with misogyny.
Did it?
That was not what she was describing as misogyny on the part of.
I think we can look at him and think he's misogynistic. It might have been the straw that broke the camel's back.
It could have been. Those poor camels do put up with a lot.
I will say that I think I was not. I think Gillard was in when I was in my 20s. I was in my very brief but fun party era. So I'm not going to say that I have any.
I read a book, have you?
No, not yet.
I think I read the first half and I get it. It was a chat show and you all put up with a lot of crap.
Oh, yeah. I mean, if you've seen that ABC series.
What do they call it? The Killing Season.
Killing Season.
Yeah.
Yeah, Killing Season. I mean, that is, it just shows you how tough life as a politician is.
Oh,
and so I've got every sympathy for what they go through.
But especially if you are or were a female, especially if you've got if you're Muslim, if you all the things that can create additional challenges and barriers and intersecting identities where people then, we were talking about some crazy political acts yesterday, people will have swift and strong opinions of you for reasons that are not necessarily to do with what policies you're putting forward. I think we have to call out that's still a real thing and creates additional.
I think I would like to be a senator.
That's pretty cushy.
Yeah.
The real power.
I don't know. I think you'd get Glenn. You and I were in a meeting last week, and you stood up, and your boat was in the background, and you were like, "Yep, cool. Just so you know, I don't really like corporate meetings, so let's just cut this really short. Here's what we need to do." And then Glenn afterwards was like, "Sorry, I like to keep things very short so that we don't go around in circles." How, my friend, would you deal in government?
Yeah, not well.
So what do you reckon Julia achieved that draws you to that conclusion?
Note that I said politician and prime minister. Mm-hmm. I'm not talking about the building the education revolution. That wasn't just sure, if you like underground basketball courts, cool, but it was a big waste of money, wasn't it? Was it?
Yep.
Did people get underground basketball courts?
No, undercover basketball courts in public schools. I mean, building the education revolution, could we have called it building school basketball courts? I don't know how much money went into actual education, but
probably more went into the branding of the campaign.
No, I just thought in terms of a politician, and being able to go to a press conference or an interview, just could nail it.
Yep, that's true.
And that's what I mean. I don't know if she's,
Can I concede on something which you probably would never think I would say? Remembering I'm saying that whole phase was a bit hazy for me. I agree, and she's very strong. And even looking at her, I was like, oh, this is impressive. I also think Tony Abbott, although I don't really think he's a great guy, I think he was a very good opposition leader.
Yeah, but do you know why? Because he just kept on message. It was like, I'm going to reduce your energy costs, I'm going to stop the boats, and we're going to repeal the carbon tax. They literally just said those 3 lines for 3 years.
So great retail politics, bad for the country, great retail politics.
Yeah.
And starting with,
Were they his 3 slogans? It was something like that.
I think it was
stop the boats, repeal the carbon tax or whatever, and lower, it was something else. It may have been lower
the cost of living, no?
Who knows?
But I mean, that he was the master of the 3-phrase slogan.
And so it's sad for Julia. If you think about it from a timing perspective, she had, if we're saying, he was, I don't think he was very good for the country or just for people. She had a tough gig anyway. Throw in a guy that was considered one of the best opposition leaders. The timing is a bit.
But she wasn't averse to knifing her predecessor. So if you live by the sword,
but that's
you
politics,
sort of
isn't it?
It is.
Yeah, but that's more of there is more of the machine faction than personality.
And that's a peculiarly Labor thing.
Yes.
The factions in the Labor Party are much more vicious.
And now they've got to go to a rank and file 1,000-member vote. So it can't happen again-ish till it does. But
have we started a political podcast?
I think so.
Well, the rest is politics.
Yeah. I would like to.
The rest is super. Should we get back to super? Or you bet over super?
On that theme of
so we
tax.
got a bit.
We'll be back right after this second mid-roll marker. Okay, we're back. Fiona said, for those of us lucky enough to be in the 47% tax bracket.
See, she likes paying tax.
Yeah. And pay
Anya,
Div.
Fiona, thank you for your contribution.
And pay Div 293 each year, i.e. employer contributions exceed 30K PA.
Well, they can't. Oh, no, they can't.
No.
Even Dev doesn't.
No. I'll swing back around, but
So let me read
the 293,
Yep.
that's not to do with going over your cap. That's to do with your income of 250.
That's right. So it's 15% on your super contributions if you're...
Paid mine the other day, Vince.
Did you?
From super or out of pocket?
Out of pocket.
Good on you.
What would you? How would you pay your extra 15?
I managed to structure my way around it. So,
Vince is a billionaire who's tax avoiding.
so I've never written a Division 293 check.
What?
Family trust, baby.
Yeah, but I don't have a
Yeah, I
child
was gonna say, I need
or a.
You've got a bucket company.
Yeah. No, I just I don't know.
And of course, I've reached my preservation age.
Yeah. Actually, to be fair, we are actually, I think my drawings now, we are going to change it. So I don't, how are we doing it? We're doing it so I keep under the Div 293 going forward. Yeah.
Is Div 293 and Div 296 screwing anyone else up?
It's
screwing my brain up.
It's
It's
annoying.
confusing to keep remembering it.
Yes.
296 is a 3 mil. 293
Is the
is the
250.
250.
Yeah.
Yeah.
And now, coincidentally, the SGC on the concessional cap equals the Div 293
Which
cap.
is just an anomaly right now, isn't it?
Oh, I think that was actually designed to get there eventually.
So 250K times 12%.
Is 30 grand.
So what? Yeah, okay. So what happens if someone draws 500 grand a year, Vince?
As in taxable income of
Yeah.
500 grand?
Does their employer stop paying SG
Yep. There's
halfway
a cap.
through the
There's
year?
a cap on SG.
Yeah.
And in fact,
And it's a quarterly cap, isn't it?
But the SG cap now, I think, also lines up with the 250, whereas
Right.
it didn't used to.
Yeah.
Which is a problem for a lot of doctors because they've got two employers.
Yeah.
And so both employers hit the cap, and it's a real problem. So Dev, much as I disagree with him on his desire for greater concessional treatment for his super fund, that is a bit of an anomaly where most of our
that
medicals...
just flicks over and you've got to elect to pay the extra income tax and you keep the money in the fund as a non-concessional.
Yeah.
Yeah.
But someone with one employer can never be in that problem.
No, that's right.
But if you've got two employers, you can. And most of our medical community do because they work for both.
So the question is it still worth putting non-concessional contributions into Super 2? Well, if you've got extra money and you want to invest it for the long term, what's the problem?
Yeah, I mean, there's not a lot of benefit in making a concessional contribution when you're a long way from retirement, unless you've got rid of all of your debt and you've got some assets outside super. Because it's really just a tax on the income arbitrage.
That's right.
So you're paying 15% tax on your income rather than probably 30 in a bucket company.
Yes.
I mean, my question, without knowing almost anything other than what's written, or not knowing anything
You're a financial advisor.
other than what's
You
written
got a
from
license?
Fiona. I do. I think depending on your age and where you're at, definitely when you're in this situation, people start thinking about things like, do I put money in super or do I open things like an investment bond?
Well, I think you'd probably cascade it down. If you're capped out at your 30K, like there's a high chance you've got a mortgage, I'm probably just paying a bit of tax and putting extra on the mortgage or I don't know.
Well, I mean, if you
Or
get
investing.
close to preservation age,
That's different.
it makes it play. But all you're gaining is that tax on the income that it generates, and the quid pro quo for getting that concession is you don't get to spend it till you're 60. And so if you're 30, I'm not sure that trade-off is particularly valuable. If you're 50, probably. But it depends on how much money you've got and how well you could cope with a pre-60 retirement before you should do that. This is not a mathematical question. This is a life goal question.
Yeah, and there was another question that we answer every week.
I'm missing something. We need to loop back to that in a minute.
Yeah, go on.
Yeah.
What are you missing?
I want to loop back to both of you. I'd like to disclose I haven't finished my coffee. Why would you be making extra contributions to a mortgage if you wanted to use that money to diversify outside of the family home? If these are the specific questions that they're asking, there's an assumption
I probably
that
said it wrong. I'm probably saying if I'm, in my 40s or something like that, and
If you're in your 40s.
if I was in my 40s, and I had a good amount of income and I was hitting the CC cap, I'm probably not putting extra money into super non-concessionally. I'm either paying off the home, investing elsewhere, buying it.
Okay,
That's what I was saying.
you didn't. You said mortgage, but
I did. Yeah, in my mind, I was like, sure, you've got that tick box. All right, what other financial goal can you attack?
Sure. And then your piece around. Sorry, I feel like I'm like, and now you, with love. It not being a financial one, more obviously always it's a goals and values and situational led piece. But if you are younger, and I agree, obviously the older you are, the closer you are to.
So for me, it's a bank account.
Every day
put
we
it
get
in,
one
take it
step
out.
closer. But there also is a very genuine consideration if you're in that sort of awkward, like mid-40s stage, especially because we see retirement age continue to be pushed out. If you're getting taxed at 30% and you're getting Div 293, I think people are not necessarily, I agree, not doing non-concessional. I've never heard of that, but it's more the investment bond versus super. I think that becomes a very interesting conversation. But that is a mathematical one. So I was interested in why you said it's not.
Sorry. When I said it's a lifestyle, this is about making non-concessional contributions. If you've got some spare cash, you've hit your 30,000 concessional cap and paid your Div 293.
And we've assumed you can't backfill or you already have backfilled or whatever.
And now you've got some more cash to invest. The question is, should I make a non-concessional contribution with that? And there's only real two benefits from doing that. One, you drop that tax on the income from your marginal rate to 15. And two, you access some non-concessional caps that you'll lose if you don't use it. And my point was that trade-off between paying what's going to be in effect 20-something% tax, or maybe 30% tax in your own name by the time you take CGT discounts and franking credits into account, that trade-off is marginal. And if you're not prepared for a pre-60-year-old retirement, given that 2/3 of Australians retire at a time not of their choosing.
Is that right?
That's correct.
Like the one we were talking about at the start. Someone got made redundant.
Yeah, at 72.
Yeah.
So that's either because they get sick parents, they get sick themselves, they get made redundant. So if you're in IT and get made redundant at 58, you ain't going back to work. Some other professions are a lot more forgiving, but all people in their 50s who get parents who need caring, partners that need caring, they lose their job, they get crooked themselves. All of these things lead to people retiring at a time not of their choosing. So if you've got income protection, that can help.
Not if you get made redundant, but
Not if you get made
Yeah, and at
redundant.
that age, it's really expensive.
So what do?
Yeah.
You go, well, does it make sense for me to lock this money away till after I'm turned 60 in return for lowering the tax rate on the income? And that's a much more marginal argument than should I make a concessional contribution or not. That was the point.
If you cascade down to the investment bond, there's still, in theory, you'd want to have at least a 10-year horizon anyway.
Totally. Albeit you know in the back of your mind that you have a lot more flexibility if you really needed it.
Yeah. Here's a crazy one. Kelvin said, how much do I have to make salary sacrificing worth it? I mean, if you earn over 45 grand a year, it's mathematically worth it.
Well, it's mathematically beneficial. Is it worth locking the money away to age 60? And
At what cost?
yeah, so is it going to cost you more lender's mortgage insurance when you buy a house? Are you going to have to put the childcare on credit card? Are you going to make some other sacrifices? How are you going to retire before 60 if you want to?
Feed yourself.
Can you feed yourself?
Yeah.
And I had this argument with lots of people about the COVID withdrawals in super, where people are going, oh, that's going to cost you $40,000 when you retire. Yeah, well, actually, it's probably better than losing my house today.
Sure, but plenty of people took that money and then I'll use someone who I will not name in my family.
Yeah, bought a boat or whatever.
No, he didn't buy a boat, but he...
Candy.
Crap.
No,
But yes, in that example, that works. In the example that I'm talking about.
Yeah, you've got to carve out people doing it against the law or the rules. Not that anyone got audited, but yeah, I want the money now so I can survive today. That's worth 40 grand to spend these 10,000.
And this is part of the challenge of forcing people to put 12% of their income into super. Does that make sense for someone who's making 40 grand? So they're going to be better off in retirement anyway. So if you have a couple with 2 minimum wages, they're going to be better off on the age pension.
Oh, yeah. Most people are.
So why should they be forced to save 12% of their income?
The question is, will there be one?
Of course there will be one. Have you read the intergenerational report?
Which one?
The most recent one?
It's burned in for the next 25 years or something.
Age pension spending, which is about $1 in every 4 of taxes raised.
It's a lot.
NDIS will be getting close.
Yeah, NDIS will be getting up there. As a share of GDP, continues to rise for the duration of the report.
And
so this is not, and it was never intended to replace. Super was never intended to replace the age pension. That's not. If you go back and read Paul Keating, the works of Paul Keating, St. Paul, that was never what was intended. It was intended to. Well, first of all, it was intended to kill inflation. That was the point of compulsory super. This was never about retirement savings.
What?
It was a deal with the ACTU to
it was a good way to take 3% out of
get people
3%
to
wages out
not
of the
look
economy.
for wages increases in order to kill inflation. By the time it actually happened in 93, it was probably a bit late. That was the whole purpose of the original accord which brought in compulsory super. That the union movement agreed to accept 3% into super instead of a 3% pay rise, because a 3% pay rise would have flowed through to inflation. And the then Labor government was trying to kill inflation.
Do you think you could live off the age pension?
I reckon it's tough as a single. As a couple, it's not too bad, especially when you...
If you own your house.
If you own your house, and you access the HEAS, the Home Equity Access Scheme.
Okay, yeah. I don't know what that is.
It's effectively a reverse mortgage
it's like
provided by the
mortgage.
government.
Yeah.
And so you can draw up to 50% of the age pension. So if you get a couple with a $750,000 house retiring at 67, they can get $66,000 a year, which is more than a lot of Australians raise 3 kids and pay off a mortgage on. Is it enough for me? Probably not. But
Old Mossman Daly over here. Cremorne, if you will.
yes, I slipped over the border. But luckily they abolished the electorate of North Sydney, so I'm back in the Mossman, back in Warringah electorate. So that's not a bad retirement.
But if you don't own your house, you're screwed.
Yeah.
Screwed.
If you get to retirement without owning your house. It's really tough.
Many are, I'm sure you saw the Vanguard report that came out last year about how many people are retiring with a mortgage. So scary.
I mean, that's a bigger problem.
That blows my mind a little bit
So scary.
because I guess, yeah, I don't know. It depends. Like, has someone refinanced the house every couple of years, got the equity out, bought new Rangers and jet skis and boats and debt consolidation?
School fees is often what goes on them. But if you buy, you upgrade you have kids in your 30s, you upgrade the house as they get a bit older at 40, 30 plus 40 is 70.
Yeah.
So all you got to do is refinance it once and not make additional payments, and you're now retiring with an age pension.
Because what, the first home average age now for the first home buyer is 36?
34, yeah, mid-30s.
Crazy.
Yeah, it's tough.
But if 30 is the new 20, we're not quite prepared to accept that 70 is the new 60 though, are we?
I'll accept that. I don't care.
I feel like it is though. Like, look at the Golden Girls. And then, like you look at
Blanche.
I used to love them. But you look at like some 70-year-olds now and you think, you are not blue hair and bingo. Like, this is not what I thought a 70-year-old would look like. Like, I think actually Australia has a very ageist culture and we sort of very much
I know, I
the
feel
elderly.
discriminated against every day.
And look, here we are. We have you as the diversity hire for today. No, I'm joking. But if you go to places like Europe, like I think they're far better,
In Japan or
like integrated. They don't
out
they
the
don't throw
pasture.
That's because Nonna's at the back making the passata.
Yeah, they're having little espressos and whatever. But I don't know. I feel like 70 is the new 60 to me.
Everything's moved 10 years. Like Bernard Salt has been saying it for 15 years.
Yeah, I'm not sure that it has. I mean, we're still predominantly retiring 60-ish.
No, but in terms of vibeness.
Vibeness.
Like you've still got.
Did you say vibeness?
Yeah, the vibeness. I reckon vibeness is a word.
If
the castle, the vibeness.
there's still people in their 30s, early 30s, living at home.
Yeah.
Where 30 years ago, you were out by 22.
Yeah.
So can I ask a controversial?
18.
Oh, sorry.
Yeah, go.
I just have a thought and then it just comes out. It's just, I'm not very good at filtering. So I'm trying to loop this back to superannuation and this whole idea of this decade pushed out piece. Should we have different retirement ages for people who are in blue collar jobs to white collar jobs?
But what do you mean by retirement age? Do you mean access age pension or preservation? Because there's no such thing as a retirement age.
Sure. Either.
I mean,
but then do you have to do it, a rolling 5 years? If 3 of the last 5 years you're working in this occupation or trade?
Well, think about insurances. Would they ask percentage of like what your duties were?
Yeah. I don't know.
I mean, we have created this bit of a mishmash now with the lift of preservation age to 60 and the unconditional conditional release at 65 and then age pension at 67. It feels a bit inconsistent that I know we don't have an official retirement age, but you would think there will be.
Yeah, but you ask most people in their late 50s, early 60s, guess what the retirement age is?
67.
7, because that's the age.
That's when you get the age pension.
Because everyone knows when you get age pension, they don't necessarily know 65 is the flag and 60 is a flag.
But if you hang around in the same parts of internets that Glenn and I do, you'll find that the retirement age is 40, isn't it?
Oh, Vince, if you're not fired by 40, who are you?
I've got 3 more years.
There's a question here. Oh, I don't even know we answered any of that question, but whatever.
I think we gave.
Oh, here's a good one to chew on. It's come up a couple of times. Tanya says, I'll put a vote in again for defined benefit schemes / different tax rules and strategies to maximise those differing benefits, e.g. no yearly cap / larger cap on contributions, tax when drawing funds, not at entry of funds, etc. For the record, I'm in West State Super, GSEB.
I think Tanya's getting a little confused between constitutionally protected funds or untaxed schemes and defined benefit schemes.
Yes.
There is a lot to be said for
Let's talk about the constitutionally protected schemes first.
So this is a quirk in our constitution.
I've got a copy of that at home.
Have you?
I do.
Which, the vibe, Marbo and all of that,
You can call me your royal vibeness.
says that the federal government can't tax state government assets. And so unfunded state pension schemes are state assets, and therefore the 15% tax can't apply to them.
Strange that wasn't put in as an exemption.
I wonder whether no one actually thought about it. Because it was actually litigated after the event, and the judges had a good go at this one. And so there's a handful of these. You've got Triple S in South Australia. You've got Gold West or something West in West Australia, where your contributions when they go in aren't taxed, and you pay tax when you roll it over to pension or to another fund. Some of them, like the South Australian one, has, and I think the West Australian one too, has no limit on contributions, and some of them also provide for spousal accounts.
Which is no big deal because they're going to get their tax anyway.
Yeah, but
the money's growing more.
This is like a non-recourse margin loan of 15% from the government.
Yeah.
But some of them also, you can't make additional contributions
That's
to them.
defined benefit schemes. Unless they've got some of them had that, the defined benefit scheme had a little accumulation corner of the account.
So a lot of Queensland government ones, they had a defined benefit portion, and then you could top up into a uni super is not a good example.
Yeah.
A lot of the university employers, and that's where the PSSAP came from, which was the accumulation piece of the federal government defined benefit.
But far out, they got confusing fast.
They did. And so I think if you've got the ability to be in an unfunded scheme, the tax benefit is significant, but you've got to be careful you're not losing it on the investment side.
Because some of the investment options suck dick.
Yeah, the Triple S has been
and I think
a perennial underperformer.
I think that's the technical term.
Like, did I just have a brain aneurysm? Did you just say what I think you said?
I don't know.
Wow.
You said something about Richard being a bad investor, didn't you?
It's only me who says
That
like that.
Triple S has been a dog of an investment. So did the tax benefit outweigh it? Maybe. The defined benefit, on the other hand, is the traditional source where your employer promised you a payment in retirement of X months' pay for each year you worked there.
But also it was pinned to the percentage of your income at retirement.
Yeah.
Some of them.
And
Was it Triple S in New South Wales? I forget.
So most of them have a X months' pay per year. The university system, after it almost went broke a decade ago, created this sort of hybrid where your defined benefit is a defined lump sum at retirement rather than a defined pension. And it's a formula that's based on your last few years' pay in your service, which is horrible if you don't have big pay rises towards the end of your life. So if you're a tenured professor where you got promoted in your 50s and had a great last decade or two, works out like great. But if you work in HR at a university, it doesn't look very good at all.
That was like a lot of the school teachers at our high school, one of the ones, we went to the same high school for a moment in time. They would hang around.
At the same time? No.
There was crossover.
There was crossover.
I didn't know.
Obviously, can't you tell?
Glenn would have been a prefect or a monitor by the time you got there.
I was treasurer of the SRC.
Were you?
Where are you?
You know,
Our teachers, sorry.
yeah, they would be like, you got to go, bro. You're too old. But they were hanging in there to tick over to the next band of the defined benefit. So if you don't know what we're talking about, defined benefit, I'll try and break it down really simple and dumb. Vince talked about they work out your retirement pension benefit based on years of service, income, age, all that stuff. but there's you don't log in and go, I want to invest in high growth or whatever. The pension company invests in the background.
So your employer is taking the investment return
That's right.
risk.
And the problem, I don't love them, particularly, all through the states. You've got all the local counties doing it, and a lot of these, during the GFC, they were managing the money poorly, and the pension funds were going broke. So the defined benefit, yes. Once you retire, you go, yep, I'll take my pension, and it's literally an annuity until you drop dead.
And sometimes till your wife or your surviving spouse drops dead.
Yeah, so there's some that are reversionary over to the spouse. I know we had a client, we were doing some numbers once for a client who was on a defined benefit literally on their deathbed, and we worked it out because you can cash them out at any time, and that was... For those playing at home, the Royal Commission, we won't name names, but old mate, he had clients with defined benefits, cashing them out, putting them in self-managed super funds. Remember the celebrity advisor? What was his name?
Not the Dover guy. You mean
Sam Henderson.
Sam, yes. Yeah.
So they were like...
I love that you looked at Vince because you didn't think that I would know. I was just watching you going, yeah. I don't know what he did.
He was a bit of a smoothie, I thought.
Yeah, either way.
Handsome dude.
He was, so cash out defined benefit. So if you do the numbers, cashing out usually means it's less money. But if you're going to die, cash out because if there's no died with you.
Yeah, there's a few cases where the form was signed, but they died before the payment was made, and there's a big question about whether it's a death benefit or not.
Oh, gosh.
But getting back to the defined benefits, one of the biggest puzzles that I've never got to the bottom of in relation to defined benefits, if you ask someone with a defined benefit pension if they'd swap it for cash, 99.9% people will say no. If you ask someone with cash, will you swap it for a lifetime indexed annuity, which is in effect a defined benefit pension, 99% people will say no. Those two positions are sort of very logically inconsistent.
Yeah, but usually a defined benefit pension would have a higher payment rate than the purchase power of an annuity.
No, not really, because
annuities, you've got to have so much capital to get anything.
Well, you get about 5.2% today.
Yeah, right.
Which is about where the 70th percentile return on a 70-30 fund would be. So it depends on how risk averse you are. But the point being not whether it's a good investment or a bad investment, but if you ask someone with in effect, a lifetime indexed annuity, being a defined benefit pension, will they swap it for cash? 99% of people will say no. You ask someone with cash if they swap it for one of those, 99% will say no.
What do you guys think about the Grattan report that basically said to the government, we need to think about, actually Ken Henry was saying that.
Who's your favourite?
I was just in reading his stuff.
Yeah.
Well,
I used to like, the Henry report was actually quite a good report.
It's good read.
I just
read the summary
I can't
pages.
get over his testimony at the Royal Commission.
All I'm saying is, even in that report, in the superannuation thing, he said there's an argument for the federal government to issue annuities. And that kind of swings back around to the Grattan report saying that maybe we need up to 70% of people's super being an annuity because, sure, unadvised clients stuff things. And imagine that. You've never had a cent to your name. You've worked the whole life. You've paid off your mortgage, been diligent, rock up age 60, retire. Now you've got $1 million.
Pull it out and stick it in the bank. I see it so often in unadvised clients.
Yes.
I got to 65.
I'm going to retire, withdraw super.
Yeah. Take it out, stick it in the bank.
Biggest financial mistake you'll ever do. So I see it, but it is that dance between, do you want the government to solve all your problems?
But if you remember the old reasonable benefit limits,
yes,
you had a higher reasonable benefit limit if you took it as an income
stream. It was
stream.
like $850 or something.
I can't remember what it was, but it was higher if you took it as an income stream.
Yes.
And so those sort of carrots, I think, probably do have a place in planning, that the concessional treatment for annuities is not quite what it used to be.
See, I have never given advice on an annuity.
I've got a deferred annuity in my in my plan.
Is it a lifetime annuity?
It's a deferred lifetime annuity that starts at 82.
Do they have reversionaries on them?
I don't know.
No, lifetimes can't.
Oh, no,
Is it-
lifetimes can.
Can they?
Yeah.
Which ones can't?
Last to die. But no, this is a deferred annuity, so it doesn't pay out
But you
till my
you've
82nd
seeded it.
birthday. Yeah, so I've rolled over some money from my super fund into a deferred annuity. So it's
Okay, wait.
It's been 20 years since I've done annuity stuff.
So, and you worked at the annuity factory.
I know,
for a
that's why I'm
minute.
like trying to remember.
Did you
all
work
of
for
the bits.
Challenger?
I worked for
Commercial.
Commercial.
Oh, commentary.
So are you saying when you said you rolled over,
So I
because you're not 65 yet, so is the annuity in a super trustee?
Yep.
Okay.
It's a super product.
Yes.
I don't think they work from a tax perspective in non-super
No.
environments. So I just took some of my super balance and handed it over to an annuity provider who I probably shouldn't name, and it will start paying an indexed income stream from my 82nd birthday.
What was the thinking for
When's
you to do
that?
that?
2 years?
It's about 19.
What was the rationale for you to do that?
Why annuity or why 82?
Both.
The returns on an annuity are effectively bonds plus what actuaries call mortality credits. That is, people who die before their life expectancy. So
Isn't it 79 for men? And
Life
84
expectancy?
And 84
85.
for women?
it's about 88, I think,
Yeah,
life
it's increased.
expectancy today. The actuaries put out new tables that they now go above 100. But no, this is so the return you get on an annuity, if you buy an annuity today, the amount that you get on is effectively the bond yield plus mortality credits or less mortality
So people
debits. if
also
you,
need to know with annuities, you can select whether if you die, there's a residual that goes back to the estate.
Yeah.
If it dies with you, does your one go back to me?
so no,
Daddy?
so no, this is a zero RCV lifetime. That's residual capital value.
Yes,
Sorry,
I still remember. It's still in there.
which if I die before 82, it just gets written off.
Yes.
But there is a bit of a sweet spot in the early 80s where you pick up
cash
a
in.
lot of mortality credits.
Is there an exit window before it starts?
If you waive it, you get a bigger payout.
Yes.
And usually it's worth waiving.
So
Unless
you've made a real big bet on your
oh,
health.
it's not a huge. I mean, I've made a bet, but it was just as a part of my retirement
Got a lazy
planning.
million laying around, Jess.
Yeah.
and
I
you
just
wanna-
took the view that this effectively gets rid of longevity risk
It is an interesting thing to think about.
or
yeah.
longevity opportunity, as I like to think about it now, without giving up too much capital.
Do you
So
reckon you'll buy a house when you eventually exit Life Sherpa?
my country residence? Yeah, I could. I'm a.
He's a renter, did you know?
No, I
I
didn't know that.
Yeah.
I struggle with the real estate market. I just find it very difficult to get excited enough about it to spend every Saturday morning looking.
Get a buyer's
Yeah, but
agent. Have you ever heard of a buyer's
Yeah,
agent?
but also you only need to look once if you want to
You
get
do.
buried there.
We can hook you up with a buyer's agent.
But you've got to decide the brief first, and it's actually working at the brief that's the hard bit. Like, where do I want this?
A good one will guide you though.
But where do I
And
want
what
it?
asset?
And what
Yeah,
country?
and what's it for? Yes,
Yeah,
of course.
Right?
South of France, if you will.
Maybe.
Can I loop back to something that you said that has nothing to do with whether you rent for life? Although we've all agreed you'll need more in retirement if you are going to rent
Oh,
for life.
I won't be a renter in retirement once I've worked out where I want to live.
You said
Now that I'm an empty nester.
the word opportunity.
Yep.
And I think looping back to what you were saying around people who retire with this access to money that they could never have dreamed of, and then your idea of creating this product that you've taken a bet on your health, but creates a reduction in longevity risk, whether you need that or not.
Well, my father's just turned 91 and was playing golf 3 times a week until 6 months ago.
Yeah, but I think what you're saying is a really important point that, especially with life expectancy and medical technology and whatever, the opportunity to screw yourself over in those first few years of retirement and not think about me in 20 years or 15 years or however long it is to get to 82 or whatever. I've never heard anyone implement that thinking?
Well, you couldn't do it until about 5 years ago.
Oh, that would
It
make
didn't
sense,
work
doesn't
from a tax perspective.
I think that is a really
They sell hardly any of them.
Yeah, because most, I'm going out on a limb to say you might have more wealth than the average bear, and the reason that they might not sell many of them is because you don't want to put 100% of your wealth in these things.
Well, you wouldn't.
And then is it worth putting $100,000 in it?
Well, the advantage of it is that you can effectively spend like a drunken sailor between now and 82, knowing that if you live longer, you've got all of your expenses locked in. That's the thinking.
And I wonder for the people where it's not and obviously I don't, it's been a long time since I've looked
It is
at these.
concessionally treated from a Centrelink perspective as
Yeah,
well.
or they cut off 30% of the value or something. Not that you need to be worrying about Centrelink, young man.
Is there something in this for super funds? Sure, maybe it's not
Well,
annuities or
that was the
whatever.
Grattan. Their whole shtick was
But that's government.
Grattan.
Didn't you say that Grattan said
But
that
it's funded,
No,
by
it's a
the,
think
should-
tank.
it's funded by the Labor Party, isn't it?
Oh, sorry.
Yeah, but the Ken Henry report review also suggested.
Yeah, I mean, there's been
annuities in super.
there's been a long move to convince retirees to annuitise their.
But that just goes back to
But of course, our
state-based
super
pensions, government
and
pensions.
our super funds have not wanted to play ball on this. Like,
No.
if you,
Well, why would they want to give up FUM?
well, they
can still
could be the
kind of-
provider.
Would they,
They probably make a bit of a spread on it. But
So, House Plus, I think, have one called CPI Plus.
was that just an absolute return fund?
No, it's an annuity where the longevity risk is taken by the accumulation members. So there's a contract between the accumulation members and the retired members.
It's a bit of a geese gander thing.
It is. But the retirement income covenant that the government's been trying to get the super funds, but they really haven't played ball at all.
Why wouldn't they just be radical and just be like, hey, everyone, age pension, we're increasing it. UBI, baby.
Or take the European approach where you make a national insurance contribution.
Well, they do that in the States.
Yeah, so Social Security
yep.
is a funded, sort of
Not
funded.
amazing, though.
France is a little bit like
Yeah, France is
defined
good, yep.
benefit.
Yeah.
Like you-
Well, it's pay related, so
Yeah,
you get a pay related.
and how you
Yeah. Ireland's got a similar sort of system.
And just on the side, the final RBL was 678 and the pension RBL was 1.3.
Well, there you go. So that was a carrot that incentivised you to do it. I'm not sure I buy the stick argument that says you must annuitise X percent of this.
I just know anecdotally, and I'll carve out people who don't own their home, okay? So like my parents, uncle and aunt, people like many of our Retire-Right listeners, when you get to age 65 or 70 and you stop working and you own your home, once you have, and most people will probably have between 7 to 1.2 in super combined. There's been
You're rolling a long way forward.
what? Sorry.
That's not today.
No. I mean, like literally today, if you retired, couple owned your house, had 800K in super,
You'd live very well.
you live better because you've never had that much income before and you don't have a house payment.
And you're not paying tax.
You're not paying tax and your superannuation balance is growing. Like most of Martin McGrath's clients and a lot of advisors who have retiree clients, most of the annual meetings, like you can spend more money. But the psychology of it is, what? Drop 20 grand on a 3-month holiday to Europe? Not happening. Like blows people's mind.
But bear in mind, we have been through an extraordinary
period of growth.
over the last 15 years.
Well,
Didn't look quite so good in November 1968.
no, it was funny. We were at a Queenie's book launch the other night, Vince and I, and there was this guy we just went and we go, oh, let's go and have a look what business books and money books are around.
Was it at a bookshop?
Yeah,
It was at Dimmock's
in the
in
city.
George Street.
Okay, yep.
Anyway, we're walking around and there's a guy there looking at business books and he said hi or something and he goes, oh, have you read this? And I'm like, oh, no, I haven't or whatever. And then I grabbed the Quick Start Guide to Investing and I said, this is a very good book. You should read this. And he goes, oh, yeah, he's flicking through it. And there was an example of a model portfolio or a asset allocation, 80-20 or something like that. And it's funny because he said, oh, I don't know about this like 80-20 or, 60-40 portfolio. And even, everyone online at the moment, you see it daily in Facebook groups, DHHF, 100% growth.
GHHF, you could gear it.
Yeah. What was your comment to old mate?
The cult of equities.
Well, more that most people at the moment who are in this investing groups and all that
have never been through a downturn.
They've never been an investor through the GFC. They've never been an investor through.
So we've had 3 down years since 2010. 2018 was a marginal one.
Yep.
22 and 2011, I think.
Yeah, there was a blip in 11.
Yep.
Because I was
even 20, which was a deep, sharp downturn. So from February to April, it looked pretty hairy. But by June 30, it was all over. And both the financial year and the calendar year were positive. And of course, we were far more concerned about staying alive than what was happening to our super balance.
Yeah, but you wouldn't, like the COVID thing,
that was
a blip almost.
Yes.
Like with GFC, we're talking 8-year recovery in some markets more. And
12 in Australia.
Yeah. And
of the Aussie markets, they took longer. Is that
the ASX 200 got back, and this is price, not total return, took until just before the COVID dip to get back to its 2007 peak.
Do you know, my grandmother passed away somewhere in that period and she was in a managed fund that was frozen and my father was the executor of the estate. Do you know how bullshit that was to get quarterly, even when she was...
There's still some
of those AMP property funds are frozen. I think it's AMP.
This is the thing. Like if you've never been through a downturn or if you don't understand the products you're investing in and then you're like, oh, whoa, like when times are bad.
So my Life Sherpa Invest, I think I'm in the 80-20.
Yes, you are, because you're a growth investor.
Yeah. And everyone's like, why wouldn't you go 100% growth? I'm like, well, let's just chill the F out for 10 minutes, everyone.
Because risk-adjusted return?
Yeah, anyway, but you can't tell people. That's what I mean.
Well, we can tell people. That's why we're here.
Yeah, but also they will go, that's fine, and stick to the 100% growth because they haven't been slapped in the face before. And sure, if you leave it for long enough, sure, 100% growth will outperform, but the problem is investing work, people don't. And there's a high chance of you getting scared and selling out when the shat hits the fan.
And I'm not sure there's a will in that. There's a more likely than not to.
Yes.
But if you look at the 40 years from 1968 to 2008.
What happened in 68?
68 was the worst year you could ever have retired in recorded history because we went into this low growth, high inflation period. It was worse than retiring on the eve of the 29 crash.
Really?
Yep. So if you've ever heard of the 4% rule,
yeah.
Well, that's actually the 4% observation and it's based on a 68 retiree in practice. Because that's the constraint.
Being if that's the worst.
That was the worst.
If you can make it through that, then you should be okay.
Well, that's the worst that's ever happened. Does it mean it's the worst that could ever happen? Probably not.
No.
But yeah, 1968.
I've never heard about that.
You stick with me, Jess.
What?
This grey hair comes from somewhere.
You'll be walking out here being a flippin' capitalist pig.
We didn't know.
Financial historian.
We need
You're a historian. You should be right on top of this stuff.
I love history.
Money history is fascinating.
But I love money history and I've never heard of that.
There's a book called Money by a British guy.
The Ascent of Money by Niall Ferguson.
Oh, you mean
Very good.
Not Wrigglesworth.
I saw it at an airport. I was actually going to buy it, but
not the Bank of England guy.
David McWilliams, Irish economist.
Yes,
Money: A Story of Humanity.
Yeah.
Ooh,
Irish economist, can't trust the Irish.
No.
And writer, often grouped with British Irish authors, traces history of money from ancient times to today in a storytelling style.
Can you please email that to me?
I can.
So where was I going with that?
68. We never talk about it. Had you ever heard of that?
Oh, I think I have because I've been hanging around old mate for a while.
In Australia?
Well, that's globally. I'm not going to swear to the Australian numbers.
I know what you're doing. Okay.
Have you guys seen the website What Happened in 1973 or something like that?
No.
I think I was queuing for petrol on odd days.
My mum was 10.
There's a website that shows all the wild thing that happened in that year.
Oh, because that was the
73.
gold standard, 73, wasn't
I
it?
think it was that. Like it
I
was
don't
just.
even know what that is.
Well, Nixon took the
So you know how
US dollar used to be locked to the gold. So
Price of gold.
you could
They-
convert your US dollar. You could walk into the Federal Reserve
God, if only
and
now.
say, "Give me
In gold.
X number of golds."
Wouldn't that be nice?
I can't remember what the conversion rate was. And most other currencies were there also locked to the US dollars. So in practice, you could take your pound or your Deutschmark or your franc and convert it to gold. This all got a bit out of hand in the late Nixon era.
hard to inflate money when it's linked to gold.
Well, that's right. And so gold was flowing out of the US, and Nixon said, "We've got to do something to stop this." So he pulled pulled the US off the gold standard. So looking at performance of gold pre-73 is sort of meaningless because it's a circular argument. There was a few other big things happening in 73.
In 72, we had Vietnam War. Richard Nixon visited China. Watergate.
Yep.
Munich Olympics massacre.
That was 72. Yep.
What happened in Northern Ireland?
72 was Bloody Sunday, wasn't it?
30th of January. Yeah. Were you Northern?
No.
Southern.
But we had a fair share of car bombs in my youth.
It's awful.
Anyway, there was something. Godfather was released in 72.
In fact, I finally watched the last 15 minutes of All the President's Men the other day,
Not heard of that.
which is the Watergate movie.
Oh, right.
Woodward and Bernstein were the guys who uncovered the Watergate. They worked for Washington Post.
I've seen that movie, whatever that movie is.
And
I've seen that.
when I saw it when it came out, there was a car bomb outside the cinema. It didn't go off. It didn't go off, but we were all evacuated. So I never saw the last 15 minutes
Until
until
last
the last
week.
few weeks. I can't remember when it was, but it's on Netflix or Apple TV.
God, you just don't think that people live in situations like that. And to think that that's like an experience that you literally had is a really weird one to me. Wow.
Well, we might wrap it up. I know we didn't really get to any questions, but whatever.
And also there was no marshmallows. You guys said
I ate them before you go.
Well, now that it's on video, we can be seen.
How to add a beneficiary and how long until this needs to be renewed? Well, you do that through your super fund, and if it's non-lapsing binding,
Just try
probably
not to do it online because it might not be binding.
and check how long
Actually,
they are on there for.
well, interestingly enough, I think I was telling Vince this a few months ago. I think it's Aware Super, allow you to do a non-lapsing binding online.
Yeah.
Really?
Like, what could go wrong?
Yeah, it's not actually binding.
Oh,
Yeah. Because when I interviewed the chick from Aware, I asked her,
yes, person. Yeah.
is that bad to say chick?
I don't know, but I'm sure she has a name.
Does she
forget
identify?
her
As,
name.
does she identify as a chick?
A chicken.
Did she come before the egg?
Hang on.
think so.
I'm confused. It's a non-lapsing binding, but it's not binding.
Because
Well-
it's not witnessed.
But they've obviously had as a trustee, they've obviously made a call that if we do it this way, we'll make it binding. But that's what I said to him. Like, does that line up with the CIS Act?
Have they changed it?
And when they did the witnessing or the COVID changes to digital signatures, that wasn't picked up. So I wouldn't be betting the Scully fortune on a online binding nomination that may or may not be
Not Glenn's
binding.
inheritance. But this is a bigger issue because so many people put beneficiary nominations on their super
That aren't CIS or tax beneficiaries?
that the super fund let them put on there. They get their letters. They're like, yeah,
Yeah,
cool.
so it's like name. Well, actually, to be fair, I was thinking about this just the other day.
Mm-hmm.
You could put down beneficiary Lauren, my sister, for example, on the super statement. Glenn's beneficiary Lauren, relationship sister. The super fund might not be aware that she meets the CIS definition of
Interdependency.
No, more financially dependent on me.
Interdependency.
Is that the one?
No, that interdependency is separate.
Yeah, there's two. There's financially dependent.
Yes, sure.
So
Interdependency is more vague, isn't it? It's hard
Well,
for them to.
that's
Interdependency
friendship benefits almost.
Yeah, but it does rely on you living together.
Yeah, there's like
Yeah.
a flat matey. There's some strange
Where if my sister lived down the road and she was financially
dependent
on
Sure.
me. So yeah, it is weird because the amount of clients you used to see where you get their super statement, it's like, oh, who's that? Oh, it's my sister. That's cute, but not valid.
Yes, but they will let you put it on there.
Yeah, that's
they
right.
ask no additional questions. You think, well, I've done the thing, like you do the non-lapsing binding. You
Yep.
think you've done the thing, and it leaves everyone else in absolute chaos when it is discovered they are not financially dependent. That was not a binding nomination. That now has to be, going through.
Go to the trustee.
Trustee.
Or that you'll pay
the
2% more
courts.
tax on it than
Yes.
if you let it go through your will.
The state.
I think it's so important that people know that there is lapsing and non-lapsing, binding, non-binding, that there's only specific people who can be a beneficiary.
So, yeah. So for those, if you do listen to our podcast, we did a super episode a few weeks ago.
All the episodes are super.
Oh, they really are. If you've got adult children and you have them as a binding nomination, they will pay 2% Medicare levy on the taxable component. If it is sent to the will or the estate, they will not pay the 2% Medicare levy.
But it is open to more content.
And that's the trade-off.
Yeah.
That is the trade-off. Well, let's finish with Maddie, shall we? Maddie, hello. Easy one to finish with. Rough ballpark figures to go from, calculating backwards so you can then salary sacrifice, etc. I love you. Thank you. She wants to know how much do I need in...
she didn't mean illy coffee.
yeah, I didn't know what illy was either.
You're so down with the kids.
Really am. Maddie, the amount you need for retirement is as much as possible. Now, thankfully, Maddie, I think you're under 30 still. Just work hard, focus, put as much in super as you want.
I think if you're
That's
very
my
young,
answer after 2 hours of sitting here.
Yeah,
Can't be
I need to go to
bothered.
the bathroom. I think if you wouldn't miss $10, start there. You know what I mean? Like everyone's got competing priorities. You're going to have competing priorities from a financial goals perspective for decades.
I'm yeah. Or when you're a younger person, do you really work out your lifestyle goals? And if it is this thing, all right, I want to save and buy a house, we'll probably, do super, but we'll use it as a super saver scheme.
Yeah.
But it's whether you're putting it in for long-term you or for super saver scheme, you still have the option to use it for that anyway.
That's right. But, well, I think there's
Well,
a
not if
little...
you're over the 15,000 in a year.
Sure, or 50 in total. These are the problems people dream about having. I don't know if that's...
I think the thing is, let's just reverse and what goals do you have for your life? And let's get after the goals. If the goal is, I'm happy to rent here and build wealth with excess money that I might have, I think then the discussion is, okay, with my financial goals, I've got X amount left over per month. Okay, sure, I might put half into super or I might put half in ETF. I don't know.
I don't know.
Question to finish on. Sorry.
Sorry.
No, you go. Sorry.
No, you go.
No, you go. No, I'll go. No, you go.
So I did this when I was younger. I got a financial advisor when I was 20 or 21, and he wanted to talk to me about super, and I was like, mate, Steve, I'm not interested in super. And he just said, right, what's an amount that you wouldn't miss? You wouldn't even notice it gone. And I was on like, I don't know, $40,000 income or something back. Like it was good for me then, but it wasn't, I didn't have millions of dollars to splash everywhere. So I just came up with an amount of money that I thought, okay, I'm not going to miss it. Like I wouldn't notice. And like, I think this is great and shit all at the same time. I, as a 37-year-old woman now, who has had a business for 7 years, and, businesses have different periods of, time where you may not contribute as much into super as you would elsewhere, and then you can backfill and whatever. I have more money in my super as a 37-year-old woman than most people are currently retiring with. Most women are retiring with. I think that's right. And I just did it teeny little amounts that I didn't, so I think. never a perfect
and that's what I
answer.
mean. Like every person who I've ever sat down with, when they've got a good, healthy super balance at age 50 or 60, and you ask, do you regret putting money in when you're in your early 30s or late 20s? The answer is always no, I didn't miss it.
That's true.
Because I just built my life around it.
Yeah.
And you're always going to have competing financial goals.
Yeah.
I mean, my general take on this is that you're probably better focusing on the short-term goals first, which is the buying the home and feeding the kids, and then when you start to build up a surplus, then focus on it. That the trade-off, particularly if you're in the, you're earning between 45 and 135 and paying 32 cents tax, the benefit of putting in super is 17 cents in the dollar. The trade-off is you don't get to spend it till you're 60, and whilst mathematically that's probably the better answer, that the comfort of owning your own home and not having to put the daycare fees on your credit card are probably more valuable.
It's a capacity thing. And look, I don't have children, and so I earn good money. So
You're
I
a
had
poor
capacity.
rent, though.
I'm a what?
A poor rent.
I'm a poor rent. I thought you were going back to some weird Margaret Thatcher thing. I'm like, what's
Yeah,
going with?
You rent your poor?
I was trying to figure out what you were talking about.
Poor.
Yeah, she's freaking expensive. Let me tell you.
Your fur baby.
I don't know, like if you're listening to a money podcast, you've got some type of dialed inness to money.
Especially if you're still listening at this point.
Oh, they do.
Thank you.
And real finally, T, I know there's a heap of reputable sources out there saying it, but a breakdown of age and what amount you should be aiming for to have a comfortable retirement from someone like Vince or an ART rep. So
Why not have him himself?
let's...
¿Por qué no los dos? So, I mean, this concept of how much super should I have
Lots.
is, well, more is usually better, but
Do you reckon more is more when it comes to money? I do.
well, doing more with it, I think, is more.
I'm going to pick up my Ranger in a
And
second.
so we maintain, at Life Shopper, we maintain a benchmark of months' pay for age, which evens out. Because if you look at the average for the country or the average for 37-year-olds or the average for women, well, you're probably not the average woman or the average 37-year-old. And so we look at how many months' pay you should have in your super for a given age. So how old is T?
I don't know.
Well, let's assume that she's 30. The Life Shopper benchmark at age 30 is 9 months' pay.
Gosh, I don't even know how much my pay is.
And that will put you on track to get to about 100 months by retirement.
What is 41? Do you have that there?
41.
Yeah, and 37.
41 is 26 months.
Okay, so 26 months pay.
Pre-tax.
Gross. Okay. So let's just assume my income is that divided by 12 times 26. Is that how we're doing it, Vince?
Yep.
No. I don't have dollars in my super.
Well, you should earn less then.
Oh, actually, well, I just assumed, if someone's got half a brain, they could work out the numbers, so whatever. I just assumed it.
You earn dollars a year.
No, but that's what I assumed for this.
Oh, okay.
Might be more.
Well, so you should super fund if you earn 300.
No, but what I was going to say is my whole working life, the income has shot up.
And that's
And that's what I'm going to say. It's like, that's cute, but me putting, 1 year I might have earned, and then
So-
the next year it's been whatever that is.
So it is worth looking at where we get
Never
to
really
this,
talked about my
the
income before,
benchmark.
but
Maybe edit it out.
yeah, whatever.
That if you start at 20 and your pay doubles in real terms over your 20s and you continue to grow at slightly ahead of inflation and you invest your SGC well, this is where you should be.
Yeah.
How does sorry.
And I think it's different because,
But
it's
because
different because I'm a self-employed person, so profit
Yeah.
can fluctuate. That's not necessary. I've just did based on what rocks up on my PAYG or something like that.
So that's not what it's intended to do, but it's intended to deal with the am I behind or ahead? And quite often, if we got a 30-something woman who's had kids and taken some time out, she'll be behind this.
Yeah, that was.
If you're a recent immigrant to the country, you'll be behind this. If you started work at 18, you're likely to be ahead of this. So the fact that you're ahead or behind is not of itself a meaningful indicator of what you should do about it. But it allows us to put a bit of a marker in that if you are behind this, what's the reason? Did you start work?
Okay, well, Megan said, any advice for two Aussies who have lived abroad for almost 10 years and haven't contributed to their super in a time and they're feeling behind, how do we catch up appropriately? How do we know where our balances should be comparatively at 36, 37?
So the question there is, well, what's the rest of your finances look like?
If you bought if you lived in London for 10 years and you bought an apartment over there and it's worth £500, you bring that home, you got no problems.
Yeah.
Because super, we've got to look at our
and you've got an entitlement.
asset
You might have an
pool.
entitlement to a UK pension.
Yeah.
There's a whole bunch of reasons why.
And if you've got an investment property with 300 grand of meat in it and your super's a bit lower, step back, look at your total net worth. More is more when it comes to money. The average super balance by gender, all ages, men 182, women 146.
Is that the average or the median?
Median is men 66, women 52.
Yeah.
Hang on. Can you say those again?
This is all ages.
Oh,
Yes.
sorry.
Median, men 66, women 52. But ART on their website.
They do. They've got
But
two
theirs
different
is pegged back to the AFSA.
detective thing, whatever.
Well, theirs was pegged back to the AFSA living standards as a comfortable retirement to get 50 grand a year.
or 70 as a couple.
Yeah,
Or 46 if you're a
73.
renter, which I think is insane.
And the super consumers version is maybe more relevant for most.
Okay.
Sorry, maybe more relevant for most people.
So, the Super Balance Detective, what you said, that was the name of it.
Tick.
Using super gurus, So they're saying for a comfortable retirement by the age of 67, how much super should I have at my age? 30, 66, 35, 111, 40, 168, 45, 220, 50, 296, 55, 377, 60, 469, 65, 571.
That's how much you should have. These are not average balances
for a
at
single
ages.
person.
For a single person to use the comfortable retirement number that AFSA say.
So to get to, what is it, 49 for a single?
Yep.
The AFSA standard?
For 52?
And the average...
It's 73 for a couple is the current number. I can't remember what the single is off the top.
The average super balance by age, 35 to 44, average men, 107, average women, 76. 45 to 54. And I think if you wanted some type of peg, I think these are the numbers that you want to be aiming for. Would you guys agree?
The table above that you talked about?
No, the average. Because that's a little if Megan's like, all right, we've been overseas for a couple of years, we don't have much super, would like to use the carry forwards and catch up. If Megan is 37, the average in Australia is 76.
For women?
For women, she could be like, look, I'm just going to get it up to 100.
Yeah, but does she earn more or less than the average Australian?
And that's right. And that's kind of...
And that's why we took it back to month's pay, that you eliminate all of those.
Yeah, but it's your month's pay thing. It probably works if you've been a HR executive for the last 10 years and you've had a real stable linear because it just doesn't work for me.
Well, you're not a normal PAYG earner, but if it's based on the typical lifetime income protection for a salaried person or wage earner is your pay rises rapidly during your 20s as you get more experienced, and then it starts to slow down a bit and peaks in the late 40s. And if you take that trajectory, take your compulsory super and invest it well, this is sort of where you get. It's not intended to say this is what you need.
No, but like if you were a grad at age 25 tomorrow, and you rocked up at an 85K income, and you had a good healthy career for the next 40 years with your 12% SG,
you'll get that.
You're all G, baby.
Well, actually, the more you earn, the harder it is to get enough.
Well, no, I'm just talking about in terms of super balance.
Sure.
Yeah. Because if you have a median income, let's say you make 95 grand a year, and you spend 2/3 of that, the age pension plus a relatively small super will get you to replacement. The more you earn, the bigger amount of your replacement income you've got to generate from savings.
Also, just as a very side note, noting that I am not qualified in my mind to talk about any of this at all, but the asset threshold reductions that are coming later this year in terms of pensions, that's scary.
Are you?
They've just lifted the deeming rate, which will affect you at the lower end.
Will they pause that during or halved it?
They have
COVID?
it, yeah. So they've popped it.
Go from 2 mil to 1 mil, right? In terms of assets for aged care, yeah.
Yeah, aged care.
For aged care. Yeah, I'm okay with a
What
bit
did I
more
say
user
that?
pay. You said age pension.
Oh, sorry.
Yeah. So
We've been here for 14
Yeah.
hours.
aged care will
I've got to
take
go
care.
get the Ranger. Can you drive me to Cardiff on your way home?
We're going to get wet.
Are you?
What?
Cardiff's the other side of the world.
Oh, bless you.
This guy.
And you still said yes. That is a commitment to stay in the car with him for that long.
All right. Well, I don't know. Any final comments, peeps?
It's not the same without the marshmallows.
Really isn't. Do you have any comments?
No, thanks for having me fireside chat. Is this what they're normally like?
Yeah.
Cool.
They're not as inner city lefty.
Is that what I am?
I don't know, are you? I'm just
I don't
geeing
know.
you up.
I just say what
love
I think
geeing you
and
up.
then I
yeah,
just-
I don't
Are you
guess.
still in a city?
Yep.
She's in the Surrey.
I'm in the inner city.
I thought you'd moved out.
Did you ever live in the city? Oh, you were Balmain.
I lived in Balmain. Where have I lived? I lived in Milsons Point, Artarmon,
He's a North boy.
Cremorne, Birchgrove, Balmain,
Birchgrove.
Oh, it's the inner west.
Piermont.
Fleeting moment in the inner west.
Piermont.
Okay.
Mossman,
Getting closer. Oh, no, he's reverted back.
Cremorne. So full circle after 30.
When you say full circle, what you mean is, and then just half a little semicircle and then back over. Yes. Anyway.
No.
Thanks for having me. I'll bring the marshmallows next time,
Yes,
right?
you can listen to Jess Brady's podcast, Financially Fierce. You can go to Vince's website, lifesherpa.com.au. If you want to have a look at the Life Sherpa Invest, you can do that. Otherwise, thanks for hanging around. My name's Glen James. You guys have been real. Bye.
Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Simo Interactive Pty Ltd, the publisher of this podcast, and Glen James are authorised representatives of Money Sherpa Pty Ltd, which holds financial services license 451289. Opinions or comments from any guests on the podcast are theirs and not those of the host or the publisher or their respective license holders.